Good morning, everybody. Welcome back to another episode of the Market Open. Another day, another Airbnb. We are in a different location now, but we are live. We've got a lot to talk about because we've got a lot going on. We have a relatively green pre-market. And I think there's some headlines causing that green pre-market, but we also have some macro data that came out this morning that I even forgot we had coming out this morning. I was so focused on non-farm payrolls, which is coming out on Friday. Today's Wednesday. I didn't realize we have private ADP payrolls coming out today. And they just came out. They weren't really the best. Still, the market kind of doesn't care, which is quite fascinating. I think there's a really unique macro nuance going around, at least in this point in time, around interest rates, which are being the hedge against bad data, because if there's bad data, we should get cuts with interest rates. That's what the market's looking forward to. So kind of that good news, bad news is good news, but still, pre-markets are relatively green, even though we had a very green day yesterday. Robinhood closing at 72. Right now, it's about $72 in the pre-market. NVIDIA closing at 141. Right now, it's at 141.94. So overall, we're going to talk about some of these different price action movements that we got. S&P 500 is flat right now in the pre-market. It's closed at 596 yesterday. We are less than 3% away from an all-time high. So the question is just going to be when we end up getting that all-time high, but it does feel like there's a good chance for it to happen. Are you in the break room of an office? I am not. I'm in a regular Airbnb. I'm always in the weirdest Airbnb. It's not even a weird Airbnb. It's just like, it looks like it does look like a break room of an office, but no, it's just a regular Airbnb. It's actually a good one. There's a bed here. There's a couch. There's a TV. Like it's not just like a regular like a bed and that's it. There's like actually a lot of space here. You guys just can't see it, but you guys will find out what I'm here for probably in like the next day or two, and we will keep going from there. But we got a lot of news, dude. I didn't even think we would have these many things happening in the pre-markets, but we do. We also have CrowdStrike earnings. I forgot we had CrowdStrike yesterday, so we'll talk about that. And CrowdStrike, not a horrible earnings, but definitely not the best. And so we'll talk more about how those earnings played out. Is this amidst new penthouse? Yes, exactly. Are you in federal prison? Oh my gosh. There's a microwave in the room, dude. Book a hotel room and now a trap house. Dude, this is a good Airbnb. It just doesn't look like it, but it's a regular freaking Airbnb. It's not even that bad. It just looks weird in the back. You guys are just so used to the bricks. If there's no bricks, it just, it looks much worse. All right, cool. So let's get into it. Lot to talk about. Good morning to everybody. Today is Wednesday. This is going to be the first trading week of June as it ends out in the next couple of days. And my, oh my, has it been a week given some of the stock price moves that we've seen over the past couple of days to begin June. But let's get into the big data that's kind of affecting the entire markets, or really not affecting the entire markets. You would think the markets would be upset at this number. Not really. Here we go, folks. ADP private payrolls for May, 37,000 versus 110,000 expected. Weakest monthly ADP report since May of 2023. I saw the number and I was like, okay, we should see some weakness. And like, the S&P was down a little bit. It wasn't green anymore, but this wasn't like meaningful weakness. So the last time we had this type of a number was March of 2023, and it was 53,000. 53,000. So for everyone, we've been talking about this all week, right? That there's a lot of you guys are thinking, Kris has been talking about this, that there is some pretty easy ways to figure out that the labor market is not as strong as what people thought it was. The ADP kind of confirmed that today. So what did they actually say as a result of these numbers? Here were their actual words outside of just the data. So they said U.S. hiring is losing momentum. The pace of hiring in May reached the lowest level since March of 2023. And the April total number of jobs added revised to 60,000 from 62,000. Again, the JOLTS data yesterday kind of, showed us, hey, do we really believe that there's many jobs? And, one could make the argument that if people are not having these many jobs, then that means the job opening should be increasing. So JOLTS beat by 300,000 yesterday. You could either say those are ghost jobs, or you could say, well, if people are either getting fired or people are just not getting hired as much, which is kind of what ADP is saying. ADP, one of the representatives was on CNBC 20 minutes ago, and she said it's not that the labor market's like horribly weak. It's that U.S. private companies aren't hiring as much, which makes sense in the context of the JOLTS data, because the JOLTS data showed that there were so many more jobs that were open. And so from that perspective, markets just didn't care. Markets just didn't care. Why are you guys spamming Hood? What's going on? Holy moly. Okay. 74.15. We cracked 73 and 74 in the pre-markets. I would be spamming hood as well if I were you. Holy crap, dude. Oh my goodness. This is pretty incredible. Well, I'll tell you a stock that doesn't care about ADP private payrolls. Robin Hood. By the way, we need to talk about something. We need to talk about something real quick. So that's the recap on the private macro data, right? ADP payrolls were way worse than expected. U.S. hiring is decreasing. Non-farm payrolls on Friday is going to be the really big issue in terms of how this all plays out. But as of now, the market, and we'll talk more about the resiliency of it, but the market doesn't care. Like there's a lot of stats I want to show you guys, but this is a market that really wants to get to all-time highs and nothing, whether it's Moody's or Europe tariffs or China tariffs or bond auctions, nothing, or a private ADP payroll number that's way worse than expected. Nothing's stopping this. Nothing is stopping this right now. But in the midst of all this, I had to deal with this yesterday. So I know my mom gave birth to me. Okay, I understand that. Like I get that. The only reason I'm alive right now is because she brought me into the world. But I feel like I'm starting to pay her back a little bit. You know, just starting to pay her back a little bit by making sure she doesn't fade the S&P 500 hood move on Friday. So she said, this is yesterday. She said, I feel like selling all my hood today and then buying again when it comes down. And I was like, no, don't do that. And she's like, I'm just kidding. I'm going to sell 100. I was like, no, don't do that. Give me 10 minutes and I'm going to call her. She's like, why? I was like, do not sell. Let me explain. She had no idea what S&P 500, she doesn't know what the S&P 500 is. Like she knows what it is, but she doesn't like really understand what it means to like get included and what that does for buying pressure and all this stuff. Mind you, this woman, if I'm not wrong, in a Roth and her total brokerage has 2,700 shares and the average is like 38. And she's like, I feel like selling all of it and buying when it comes back down. I'm like, what type of Warren Buffett do you think you are to say you're going to time this market and completely just say, oh, I'm out at 70. I'll get back when it comes to 38. It's like, first of all, it might not come back to 38. Second of all, that's just like, it's getting a little too cocky, mom. So I really had to, walk my mom off the edge yesterday and be like, let's it might not get into the S&P. It might fall back to 65. But that doesn't mean we sell. We don't fade that move, because if it does get into the S&P, which if it's up another 3% in the pre-markets, it was up 5% yesterday, 8% in 2 days, kind of feels like the market thinks it's going to happen. Now, maybe there's not a big move on Friday because it's all being priced in, but still, I mean, if they get in, you don't want to, sell 2 days before that. Yeah, I had to stop my mom from doing that. So, there you go. That's I called her like a couple hours later. I was like, so you get my point, right? She's like, yeah, no, I get your point. I also get that I'm literally feeding your content on Twitter. I was like, yeah, you're a great mom. You gave birth to me and you provide me with all this juicy content. So there you go. But the point of that is like, hey, I don't think you fade this move, dude. And I think you can hedge against it. I think you can sell the $80 call, the $85 call, whatever you want to do. But I don't think you sell before S&P inclusion, because it seems obvious through price action. It could still be wrong. All of us could be wrong, but they might not get in. They might pick Williams Sonoma again just to have fun with us. But the market's kind of saying we think this company is getting into the S&P 500 with this price action. It's hard to kind of go against how the market's thinking of this right now. Again, we could be wrong, but it does feel like it's going to happen. So 74.25 all-time highs on Robinhood, or pretty close to all-time highs. We'll see if this continues as the market opens. I could easily see this getting dumped as soon as the market opens. This is low liquidity in the pre-markets, but you do got some buys coming in, and you might have some people saying, screw it, I'm in, and I want to see what happens on Friday as well. So that is what we got on Robinhood 74.37. There wasn't any other more macro data today outside of that jobs report. I think we're going to get ISM in like 50 minutes, and so we'll see that. We also got some ISM data yesterday, but the private sector job growth, that was the kind of big miss this morning. Oh, Trump tweeted about it, by the way. So Trump, as soon as he saw the number, he had to blame somebody, right? Because he's not going to blame himself. So here you go. ADP number out. Too late. Powell must now lower the rate. He is unbelievable. Europe has lowered 9 times. By the way, I don't disagree with him. Like, every president has to find a scapegoat, and he has one. Biden didn't have that many scapegoats outside of like rich people and billionaires, right? Like, but Trump has one of the easiest scapegoats on the planet. It's Powell, who's not cutting when Europe has indeed cut 9 times. So look, I don't disagree with what Trump's saying right here, and I think the public pressure is good. But I am very curious tomorrow if the non-farm payroll isn't good. Market wants 130. Last time we wanted 130, we got 177. If that happens again, how does Trump kind of frame the narrative? How does the Trump administration frame the narrative? Because their argument is that the economy is the greatest it's ever been because we have low inflation and high jobs. It's really hard to get that equilibrium unless You get someone who's part of the Fed to like lower the rates to actually usher us into that equilibrium paradigm, which is kind of what J-Pow did in 2024. So it's going to be a question of if we can get this done the right way. But yeah, Trump did say it's time to cut. So that's what we got from Mr. Trump. Yeah, PMI we're going to get in about 50 minutes as well with that macro data. Cool. So that's some of the more macro stuff this morning. I did buy a stock yesterday. Some of you guys might know because I tweeted about it, and then we will talk about Elon and Trump because that's a whole different situation going on right now. I finally established a real position in Hims. I bought the dip, 54.72. I promise I'm not going to sell early this time. 350 shares. Bought it yesterday at around 12 p.m. The reason I bought it is outside of all the arguments we've talked about for the past month at this point that have been drilled into my head around the thesis around Hims. The actual reason was, dude, it was up 20% and then it came down 20%. And to me, I was like, okay, that's an opportunity. Like plain and simple, like if the market was willing to give this a 20% pump off of news that maybe didn't deserve a 20% pump, but still deserved somewhat of a pump from the market. And then they gave all of it away. I just have to get used to the volatility in this. I can sell covered calls against this to kind of help with generating some more premium, which I haven't sold any covered calls yet. I kind of want to wait till we get back into the 60s if we get there to sell covered calls. And then two, I'm just like, you know what? I can't be greedy here because if I'm expecting below 50 and we haven't got that in a month, I mean, it could happen, but the whole point of DCAing is that you kind of just don't know, and you got to take a risk when you have a chance. Hims right here is up about 1.4%. It was down 3% yesterday after the Zava acquisition pump and then eventual dump. So yeah, I'm in Hims. I'm in it. I will try to double down on the position if we get into the low 50s, but if we don't get into the low 50s, then we'll see if we DCA onwards. Look, it's a cheap stock. And the other reason I bought it was like, dude, it's a $12 billion market cap relative to the rest of the market. Like, I'm going to buy a hood again eventually in the 70s. It's just one of those things where like I was buying a lot in the 60s, and like I was kind of buying for this reason that we would break through the 60s. And so inevitably, I will buy in the 70s, but it's like the market, there's some expensive names in the market. It's hard to find. Like Nvidia is not the same as it was at 105. Hood is not the same as it was at 40. Palantir is definitely not the same as it was at least 70 or 80. So it's just like a lot of names are expensive. Hims is the one stock that is growing nicely that doesn't have anywhere near the multiple as all those other stocks. And as a result, I said, you know what, let's pull the trigger. So there we go. I'm Himothy. I am Himothy, and I am in. Where's CoreWeave right now in the pre-markets? This stock, dude. I don't like what is happening here, but like it ended at 150 yesterday. I saw a tweet that was like, oh, CoreWeave ended at 150, and I didn't believe it. And then I checked Robin. I was like, CoreWeave ended at 150. This stock was 90. I bought it at 95. About one share at 95 less than 2 weeks ago. It's at 150, and it's already up from the IPO, which was 42. And now it's 157 in the pre-market. It's up another 4.4%. I mean, the only explanation I have for this is that the insiders have such a big lockup on their shares, kind of like ARM. I think Jose was talking about this last week, and ARM pumped like crazy because 90% of the shares were locked up by SoftBank. I don't know exactly the percentage here on CoreWeave, but I don't have another explanation other than there's not enough shares out there. Along with the fact that the short float is, I think, above 10%, but still, it's pretty aggressive. It's pretty aggressive. So, I mean, look, if you're in CoreWeave, congrats. If you took profits at 120, you probably feel bad, but I mean, no one could have blamed you for taking profits at those levels, just because at those levels, we were thinking it was getting crazy. At those levels, they diluted. They could have waited 2 weeks to dilute, and they would have got an extra $25 a share. But this is what we got on CoreWeave, 150 green right now in the pre-markets. How is this not a bubble? I think that's a fair question to ask. I think there are a lot of things that are obviously very frothy. However, and we talked about this 2 days ago in the context of Anthropic's revenue. Again, dude, it's like when we say bubble is something that is forming because things aren't real, right? Like it's just all fake in terms of the momentum that we're seeing. Anthropic revenue went from 1 billion in January on a TTM basis to 3 billion in May or June of 2025. In 5 months, they've tripled their TTM revenue expectation numbers. And that's all real numbers, right? Like everyone, like they put out, hey, we're probably going to do 3 billion instead of 1 billion this year. And when you see those numbers, and when you realize like that's just the beginning of it. Anthropic and Palantir, by the way, just had a new partnership that I covered at the AI Expo. The AIP portion of the ontology in a particular demo was showing Claude in the background, which is Anthropic's LLM, coding different responses to be able to respond to the user versus just summarizing. And it was like some really interesting demos in terms of how they were giving you an answer. In this case, it was like a supply chain logistics demo. That's only going to get better and better and better is my point, which means that 3 billion is going to keep growing, right? OpenAI's, I think, projected 5 billion in revenue is only going to keep growing. I mean, OpenAI's projections, if you looked at their numbers, are 125 billion in revenue by 2030. So like the point I'm trying to make is that the best response to this is this kind of bubbly? Probably not. But if there's so much demand for this just world that we're getting into, which is an AI revolution like the likes we've never seen before, and we're going to grow GDP at anything above 3%. I know Atlanta Fed says 4% in next quarter. Maybe that's because of a rise in imports and exports due to the tariffs in Q1. But still, if we can grow on the world's biggest economy at 3 and 3.5%, and we have this AI momentum, and we have earnings growth beating by 2% every quarter, yeah, these valuations can get pretty aggressive. 73.88 right now in Hood, up about 2.97% currently right now. Oh, here you go. That's it, baby. That explains it. Thank you for this, Alex. Robinhood prime candidate for S&P inclusion this Friday, says Bank of America. Once the big boys acknowledge it, that's when the big money says, all right, if the big boys are saying Hood's going to get in, we're going to buy more Hood. So there you go. If Bank of America is saying it, yeah, there it is. There it is. That'll get people excited. By the way, insiders don't know. If everyone's saying, oh, insiders know, insiders do not know. The S&P 500 committee does not tell anybody. Like you find out the day. All the insiders find out the same day. They could have maybe an inclination, but they don't get to like talk to the committee because the committee, like they just don't talk to companies like that and reveal this stuff. So I don't know if Robinhood knows. Robinhood probably thinks there's a good shot, just like Bank of America does, but that doesn't mean they definitely know. And there's no insider buying that's going on right now. Like that's also like not legal. Insiders can't like literally buy the week of S&P inclusion. So I don't think it's insiders knowing it. I think it's the market predicting that this might happen. So here's what Bank of America said. Following our meeting, we view Hood as a prime candidate for S&P 500 with the next rebalancing. We also view these companies, Carvana, AppLovin, LNG, Flut, as other top candidates for additions. We view IBKR as a top migrating candidate from the S&P 400 due to its size, as well as the S&P 500 being underweight financials and the S&P 400 being overweight financials. Okay, that's a good thing. I didn't know that the S&P 500 was underweight financials. If Bank of America is saying the S&P 500, that's actually a really big deal, dude. Now I'm even more confident. If the Bank of America is saying the S&P 500 is underweight financials, then I think there's a hell of a chance that Hood gets in. I thought they were overweight financials, actually. So I guess I was wrong because I thought with Coinbase, they were getting a little bit too aggressive with the amount of financials they had. If they are actually underweight financials, I mean, Hood's getting it. Like it feels kind of likely that Hood's going to get in. And the question is, Hood right here, $64 billion market cap. At what point does the street think this is too expensive? Because I could argue if they're going to keep growing at 50%, 64 billion. I mean, this is what Skrelly, I'm so happy that Skrelly said this on the show because it's a mistake I made with Palantir, right? The reason I was buying a Hood in the 60s and not caring about my cost basis or anything like that is because if a company is able to grow, so many companies on the public markets, there's like 4,000 companies in publicly traded, at least in the United States. So few of them actually put up growth. And what are we investing in if we're not investing for growth? Like we're looking for growth, or you're looking for a dividend, right? So most of us want growth. It is so hard to grow. So Skrelly's point around Palantir was like, because they're, at least for now, putting up the growth, and the idea is for the next decade, they can keep putting up the growth, the street's not going to care about all the idiosyncratic ancillary parts of the business. They just want to invest in that growth. Hood is more cyclical than Palantir. I think it's going to be harder for them to put up these many growth rates. But if we're in a bull market and the S&P 500 is going to all-time highs, they're going to grow. And they're going to grow at levels that most financial companies have never seen before. And if that's the case, I mean, market's going to pay up for that. And it kind of looks like Hood's following in that trajectory of a Palantir, where the S&P 500, who knows, that maybe triple digits is on the table and they can just keep going from there. So I think that's the reason why the market's giving some of this momentum, and hopefully we continue to see this going to the future. Yes, Stinger, thank you for the $5 super chat. Misty announced their dividend, 147. So I have 250 shares of Misty, so I'll get about $370. I will keep you guys updated on the process of what happens to the actual stock. My average on the stock is $21.90. So I'm expecting the stock to drop when I get that dividend, and I'll be like keeping a spreadsheet with all this, and we'll track it over the next year. But they have declared their dividend is going to be $147. So if you have any amount of shares, you get paid $1.47 per share. Thanks, Edge. Thank you for the $5 super chat. Hey, Amit, I live in Miami, and these Zoox autonomous cars I've been driving around. Turns out they're owned by Amazon. Never heard anyone talk about these. Yeah, I've done a little bit of research into Zoox. I don't know if they're like a super big robotaxi competitor. By the way, I did see a robotaxi yesterday at the AI event, and my goodness, these are sexy. But obviously, Amazon's going to try to play a role in this. There's no way Amazon's going to let Google and Tesla have all the fun. The question is just going to be, do they have the scale and ability to really make a difference when it comes to the robotaxi vision long term? Dude, these things are sexy. These, like, you give me this over a Waymo and you give me the same price, I'm picking this any day of the week. I mean, this, unfortunately, I couldn't sit in it. They didn't let us sit in it, but like, it was just beautiful seeing it in person. And it's only for 2 people. So I think they have to, they obviously have to make larger versions of it. But man, dude, if you're just one person that needs a cyber cab, it was gorgeous. Absolutely gorgeous. So I'm pretty sure there's going to be design modifications once it eventually gets on the production line and goes out to the world. But if we have hundreds of thousands of these by the end of 2026 or early 2027 running around, they're just going to look really cool in the streets. And if the price is lower than a Waymo, I'm just saying it from a design perspective. That's all I'm saying. From the design perspective, I personally like it. Some people might think it's ugly, but I would just want to, this pulling up to pick you up versus a Waymo just feels like a little bit of a different vibe. So I like it. Some people think it's ugly. I like it, but it was cool. I wasn't able to sit in it, so I couldn't get a real feel of it, but I did like it, and I thought it was not too bad. All right, let's hear from Tom Lee yesterday. For those that didn't hear him, he was on Closing Bell. Let's just get some of his thoughts on this new melt-up bull rally that he thinks we have gone into, and then we will talk about Elon and Trump and some of the issues going on with that relationship.
Too many people are not.
Yeah, I would. You'd think that with the S&P doing well this week and a great May, investors are bullish. They are not. In our calls and Zooms with portfolio managers, many are still cautious because they see tariff risks ahead and they don't have tariff resolution in hand and they can't get bullish. I think the feedback we get from a lot of folks is they think stocks shouldn't be rising. So I would say, given the amount of cash on the sidelines, the fact that short interest is going up, and we have a quiet week and markets are rallying, I think the risk is now of a substantial leg up rally from here.
I mean, that's crazy, dude. The risk is that you're going to miss a rally substantially, is what Tom Lee's saying. And the reason he's saying this is the exact same reason he gave in mid-2024 when everyone thought that there wasn't any more room to go higher. And the reason is his institutional clients, which FundStrat has hundreds of thousands of them, don't think stocks should be this high. So you need a contrarian, right? If everyone's bullish, it kind of go the opposite. But Tom Lee's saying, no. All the big guys that I talk to that deploy a lot of money, they don't think we should even be in this rally. And so his advice now is, all right, if that's the case, you're going to miss it. But that is some of the contra signal you need. And I'll show you guys some data around hedge funds and how aggressively they've taken down their shorts on ETFs in the market. We saw that was the opposite 2 weeks ago. It does seem like the money managers are realizing that they might have to end up chasing, which could create that substantial leg up.
Role do tariffs play in all of the way you're thinking about the market?
Well, tariffs matter. Remember, before February, before Trump sort of talked about this, the base case for many was a 15% tariff. Let's say that we're going to end up at a 10%. That's 10% on 15%, which is imports, which is about a 1% GDP effect. That's not that different than oil going from 40 to 80, and we wouldn't say $80 oil breaks the economy anymore. So I think tariffs aren't, we have to adjust to it, but it's not the thing that takes us to 4,000 S&P anymore.
Now, what if there's a renewed and more protracted, if not dug in fight over the tax bill? What if Musk's post on social media earlier is enough to get some lawmakers in a very thin margin Washington to rethink their positions based on his political donations or lack of support in the future? Is that a real concern in any way?
Well, this is what's going to be set up as what I'd call event risk. And it's event risk similar to a government shutdown or an auto plant shutdown, something that affects the economy for a specific period of time. But again, those have not been things to turn structurally bearish. They may be tactical risks, but again, they've always been buy the dip opportunities.
So if, for argument's sake, the tax bill ends up not as big as the price tag is on it now, would that be a positive taken by the market? Maybe the bond market would feel pretty good about that, wouldn't it?
Yeah, I mean, Scott, it's kind of hard to say because I could see it being if bonds rally, that's good for equities. But if this tax bill leads to more spending, even if yields rise, markets are going to focus on the earnings effect. So I'm just going to say it could go either way. I mean, it could be bad or it could be good.
When you hear Jamie Dimon talk about there will be cracks in the bond market, do you just brush that off? Is that, I would expect someone in Jamie's position to be talking about the risks that are in the system? Or do you sit back and say, well, maybe that first little scream from the bond market was before there's a full-on tantrum, which wouldn't be good for equities in any way?
Well, JP Morgan has a dashboard to the U.S. economy because they see consumer credit. They see it real time. We know consumer credit delinquencies are rising and auto loan delinquencies are rising. But is that going to spill over into the broader credit market to create a credit event? The one market we watch is high yield. High yield spreads have actually managed to hold on to most of the rally gains, and they've retraced 70% of the widening. That's a market that says the economy actually is starting to strengthen.
So you don't put that much cred into bigger worries about the bond market having an issue anytime soon. And even for accuracy's sake, I mean, it's not like he said we're going to have this issue tomorrow. I don't know if it's 6 weeks, 6 months, 6 years. I'm paraphrasing, but that's generally what he said.
Yeah, I mean, I think Jamie's flagging that there are parts of the economy that are weak, including housing. I mean, housing is deteriorating very quickly, but that's also going to deliver a pretty big deflationary pulse. That was 75% of the rise in inflation since 2019 is housing and auto services. So if housing is turning down on price because there's supply, I would argue that's a structural decline in inflation. The Fed would actually have to be quite dovish in the next 12 months. That's bullish.
All right. So look, I think Tom Lee's argument there makes a lot of sense. And again, it comes down to that core argument around, hey, how is the Fed thinking about what's going on in the labor market and inflation? And then B, how are investors trying to time, to an extent, what Jay Powell's going to do? And I think if you've been trying to time the rate cut, it's just not worked out all year because obviously we haven't got the rate cut. And if the argument was, well, I'll only buy when Jay Powell cuts rates or when I get closer to thinking he's going to cut rates, I mean, again, you've missed out on a pretty substantial rally throughout March and April. And the exact people that have missed out on that rally are the people that really can't afford to miss out on that rally. So this is a chart right here that came out last night. This is from, I believe it is, Goldman Sachs private book research. So look at this right here. As you can see, hedge funds just increased their net leverage over the last month by the largest amount in history. So this is Goldman Sachs trying to track the amount of leverage which is basically shown via options and margin through the hedge funds. And they might be leveraging up because obviously they've kind of missed out on the rally and they need to accelerate their gains to as much as they can. And there you go. They're saying, you know what? If we need to accelerate our gains, then we need to leverage up and we need to get back into the equity markets. Again, net sellers in March and April when things were very bad were hedge funds. It was not retail. Retail were net buyers. Retail have stopped buying as much before. But as a result, we have to probably see a reversal right here. And then here's the next chart I was talking about. Hedge funds went from shorting US ETFs in April at the fastest pace ever recorded to the largest decrease of their shorts. This is of May of 2025 since 2023. So we looked at this chart a week ago and it was the highest level of short percentage since 2023. Now it's the fastest velocity of a decrease of their short percentage since 2023 as well. And that's kind of because in 2023 it was very similar, right? 2023, people were short. Everyone thought there was going to be a recession. And then boom, NVIDIA and ChatGPT kind of went viral. And by May of 2023, we really entered into a bull market. Now it was kind of choppy because the Fed didn't cut through all of 2023. And then we got the Fitch downgrade in August. And then we kind of went back down 10%. And then October 2023, we really bottomed. But still, it's very similar to what happened in May. Everyone had one perspective. That perspective went the opposite. And then the hedgies had to bring up their margin to get more exposure to kind of catch up with the rest of the market, and then B, take down their shorts. And we're seeing all of that happen right now. So again, going back to that question, someone said, doesn't this feel like a bubble? If the hedge funds are going to keep buying, if the money managers are going to keep trying to fade the move and the move keeps going higher, which will get them to inevitably buy at a higher price, S&P 500 goes green in the pre-market, then it's hard to say it's bubbly because it just means that there's going to be a lot more money that's going to be buying at higher prices because they missed prices in the in the moments when you kind of needed to be bullish, which was when we had a lot more pain back in April and March. So that's what we got right now. That's what we got. Where's TLT? We have been thinking a lot about, oh, wow, TLT's up about 1%. So yields have been chilling out as well. We talked about foreign demand for our bonds, which have been relatively good. The 10-year has been kind of flat in this 4.4% range. Yeah, 4.418 down a little bit, but the credit markets aren't screaming. Credit markets are not going crazy. Percent's not out here trying to calm down the credit markets. If we get any level of legislation around supplementary leverage ratios or the stablecoin legislation to force buying of treasuries, or JPOW actually cutting rates, maybe yields are not going to be the story of the year like they have been for the past couple months. And if that's the case, then TLT hopefully catches a bit more of a bid as well. HIMS right here at 1.74%. I did buy HIMS yesterday for everyone asking, about 350 shares at 54.72. Currently right now 55.65, up about 1.68%. And not selling any covered calls on it, but I would be looking to double down if we see the low 50s again. Not opposed to buying in this sort of 55, 56 range, but just kind of want to see how the price action plays out over the coming week. CoreWeave up another 5.6% of the pre-market. Celsius up a little bit. Constellation Energy did lose some of that demand yesterday, or some of that momentum, given that Meta didn't really disclose the price. And I think that's what people got mad about, even though they did get that 20-year deal. Applied Digital up a little bit. ASTS, oh, real quick on these guys. They got an upgrade today. And then we'll talk about Elon and Trump. ASTS, they got an upgrade to $49 by... Who upgraded these guys? By Scotiabank. So that is why that stock is green right now. Crowd is down because of their guidance. We'll talk about that in a second. ASTS reiterated an outperform at Scotiabank with a 45.40 price target. And the analyst is saying, could Jeff Bezos become an ASTS investor? That's kind of the note, the highlight of the note. They say this is a possibility widely discussed by investors and analysts in no small measure because Bezos is one of the world's top space investors. And it kind of goes deeper into why Bezos would, or at least Amazon would feel the backing of ASTS would be exciting, and that would be a good thing as well. ASTS has an investor meeting tomorrow at 10 a.m. Okay, cool. I will try to give you guys some updates from when we get the summary of that meeting as well. So yeah, ASTS 45.40. That is the price target increase. Again, I still don't know much about the company. I got to learn more about it. Chris and I will do that stream next week, and we'll try to get some more details on what's going on. All right, real quick, CrowdStrike earnings. So CrowdStrike earnings actually surprised me. Guidance wasn't the best, and I think that's what caused the issue yesterday. But overall, it was not a bad earning. So they beat by 11% on EPS. Revenue growth was a little low, though. I thought they would be growing 30%. Revenue is only up 20% year over year, folks. They missed by 1% on revenue. So Palantir is officially the fastest growing software name in the market, just on top line revenue. CrowdStrike tends to always compound at 30%, and it only grew 20%. So that one, I now maybe the street wasn't expecting 30%. I think the guidance hit was a little bit more that they were upset about. But regardless, CrowdStrike is not growing as aggressively as it was last year. 73 cents versus 66 cents on EPS, and then 110 versus 111 on revenue. Now, all the analysts that I read today, JP Morgan, Goldman Sachs, Needham, Oppenheimer, they came out and they said $500 price target, buy it. This is stupid. So all of the analysts continue to be incredibly bullish on CrowdStrike. I mean, you're going to need more cybersecurity in the world of AI. There's going to be way more phishing attempts, way more hacking attempts. You're going to need products like a Palo Alto Networks, like a Fortinet, like a CrowdStrike. CrowdStrike just is the leader in endpoint security. But also, CrowdStrike is priced for perfection. Now, I know that's crazy for me to say that, because Palantir, if CrowdStrike's priced for perfection, Palantir is priced for whatever else is better than perfection. So I get it. But when you are priced at those levels, look, if Palantir had a really bad earnings, they would get hit as well. Now, this is not a really bad earnings, and Palantir didn't have a really bad earnings, but Palantir was still down 10% the next day. So it doesn't surprise me that CrowdStrike's down right here, because the earnings weren't phenomenal, but it also would not surprise me if this gets eaten up. And if investors that have not entered into the markets for the full year, they've had cash on the sidelines, are like, all right, what's cheap? What's red? What's an opportunity? CrowdStrike, boom. Maybe some of that money gets allocated. So I do think this one can get bought up. I think it would be weird if this one falls like 15, 20% on a day like this. So that's what we got on CrowdStrike. All right, we got 9 minutes until the market opens. Elon and Trump, the relationship is starting to come to an end. At least that's what it feels like. Here's what Elon tweeted yesterday, and here's what the press secretary responded to when she heard what Elon said.
And something that just crossed, Caroline, how mad do you think President Trump is going to be when he finds out that Elon Musk said, "I'm sorry, but I just can't stand it anymore. This massive, outrageous, pork-filled congressional spending bill is a disgusting abomination. Shame on those who voted for it. You know you did wrong. You know it."
Look, the president on this bill, it doesn't change the president's opinion. This is one big, beautiful bill, and he's sticking to it.
Yeah,
Cameron,
thank you.
And something that just crossed, Caroline, how mad do you think President
Okay, so Elon tweeted, "I'm sorry, but I just can't stand it anymore." And basically what he's implying right here is that he can't stand the level of money that people were spending in this bill. And as a result, he made his thoughts very clear. And that wasn't the only tweet. I mean, there were multiple tweets throughout last night where Elon's saying spending is crazy. We're going to vote out all these people in 2026. He's like, he's kind of getting political, but from the opposite perspective. Like, it's not super MAGA. It's almost like, hey, if you voted for this bill, you're an idiot and you're supporting a horrible agenda that's going to bankrupt future generations. Like, it was very, you could think it was a Democrat who was tweeting the type of stuff that he was tweeting yesterday. And it's kind of funny. Look, he just tweeted 6 hours ago more about our spending. It's getting kind of funny because he's completely like flipping in terms of not the political spectrum, but at least in this line of arguing, he's going the opposite direction, which is going to what the Democrats have been saying, which is that this big, beautiful bill is absolutely insane in terms of the level of deficit spending that it's going to increase. So he said interest payments already consume 25% of government revenue. If the massive deficit spending continues, there will be no money for interest payments and anything else, no Social Security, no medical, no defense, nothing. Now, this is kind of really weird to analyze, right? Because how is Elon even thinking of this, right? He supported Trump. He knew that Trump was going to do what Trump wanted to do. And I guess he was caught off guard by the fact that Trump was going to spend like crazy. Now, granted, the one thing that is good about this bill, which there are some good things about the bill, by the way. I think the Olin podcast last week really did show both perspectives, and it's good to get multiple ways to think about this bill. The good thing is that it unleashes growth, right? And one could argue it unleashes so much growth that the deficit spending is not going to be as aggressive because we're going to grow way faster than the deficit. And one could argue that, hey, if we're not cutting Social Security, Medicare, and welfare benefits, which are like the three sort of core elements of spending, along with defense, which Trump is not going to cut, then the only thing we can do is grow. And Elon acknowledged that. 2 weeks ago, Elon said, all right, I'm focused on growing GDP. I'm done with Doge. I'm moving on. But it seems like he's still really pissed off, even though he's acknowledging that GDP growth is the only way to solve this issue. And now it looks like he's kind of putting out these messages to tell senators, hey, if you want my donations, if you want my support on the next upcoming midterm cycle, you better not vote for this damn thing. And I think investors and senators are in a pretty hard spot because they're like, wait a second, like we can't go against Trump. Like that's not going to be good for us. But also we would like your money. And so you got some rumblings going on right now. I really wonder how the Senate's going to change this bill. But it does feel like the relationship with Trump is not going to be as, strong as it was in the past. So I don't think the relationship is fractured, but Elon's like aggressively saying this is the stupidest bill ever. And who's responsible for this bill? It's Trump, right? It's like it's no one else other than Trump's going to get the blame and the credit for this bill. And I mean, look at this. Look, like he just sounds like he's upset. Look at how he's tweeting. Mammoth spending bills are bankrupting America. Then all capital letters, enough. I mean, it's getting to the point where I think Elon's like, holy crap. Like, I cannot believe that everything I did with Doge was just wiped out. And there's no shot for us to have any meaningful types of cuts in the country, which I get his point, right? Because the whole reason he supported Trump, was that like Doge was such a big part of his of the reason he donated, because he was like, hey, we're fine. Like Elon, the optimist, was like, we are going to fix the spending problem that we have in the United States for our future generations. One could argue that he supported Trump even more than for his autonomous regulations being relaxed or SpaceX deals for his company, but rather he genuinely was excited for Doge, and that's just not going to happen anymore. So I don't know how that relationship is going to play out. Trump, obviously, Caroline Leavitt responded to it yesterday. And by the way, Elon was with Trump 2 days ago in the White House, right? So it's like he was with them, sounded super friendly. And then 2 days later, he's publicly bashing this bill, knowing that he's probably not going to be able to get a bunch of senators to go against Trump, right? So it's almost like, logically, what he's saying is not going to get that many senators to go against, to pick him over Trump, because their allegiances with Trump and the Republican Party. So if he does do this, I think he's doing this just to kind of voice his opinion, not really to get any results, because like not a lot of Mike Johnson is not, they're not going to vote. They're not going to go Elon's way. It's going to be hard to see them doing that. By the way, this was Mike Johnson yesterday explaining how much he respects Elon, but how much he also disagrees with him.
Yeah, let me say this. It's very disappointing. Okay, I've come to consider Elon a good friend. He's obviously a very intelligent person, and he's done a lot of great work. With all due respect, my friend Elon is terribly wrong about the one big beautiful bill. Yeah, let me say this.
He's not going to get Congress to agree with him here. So we'll see. We'll see how this ends up playing out. Now, some of you guys are saying he's pandering to get the public back on his side. I don't think this is the craziest argument, because like if I think about it from first principles, Elon doesn't have much to get from the Trump administration anymore. Maybe some regulations here and there or whatever, but whatever he could get, he's kind of been able to get. Tesla brand was hurt pretty significantly as a result of him embracing politics and all this stuff. And now he's kind of going the opposite, maybe trying to give a little bit of appeal to people, saying, hey, look, I am a logical person. I can also criticize the guy. I'm not just constantly going to praise him. And maybe that gets some people to think, oh, you know, old Elon is back. He cares about climate change and all these other issues, and he just cares about technology and the future of humanity. I don't know if that's going to work. I don't know. I think the people that hate him genuinely don't like him. Dude, I was in DC all of the last 2 days. Let me tell you, I talked to some people, and I talked to this one girl. She was at the expo. I was like, oh, are you on Twitter? She was like, I used to be on Twitter. I'm not on X. I was like, okay, understood. I was like, that gives me all I got your political beliefs right there, bro. I got it. And there was a couple other people I talked to that were just like, screw Elon. I hate Elon, yada, yada. I was like, all right, dude. I mean, like, look, DC has a ton of Republicans, ton of Democrats, but there was some sentiment of people saying like, because remember, people that work in DC are affected by the federal grants being cut, by the jobs being cut. They have friends who probably work in the government. And so one of the guys I was talking to, he was just like, dude, this Doge shit was insane. He was cutting all these jobs like crazy, reckless guy, yada, yada. And so there definitely is sentiment that I don't know is going to be easily reversed by Elon trying to, you know, explain that he doesn't like the big, beautiful bill anymore. And then it's just going to be a question of how that affects Tesla. So that's what we got with Elon and Tesla. Again, we'll see. I don't think brand damage is the real thesis. That Cybercab was beautiful. I think people are not going to care about brand damage when they unroll that Cybercab. But at least in the short term, that relationship does not seem to be at the highest of levels. But also, you know, maybe Trump doesn't care. Maybe Trump is like, you know what? I used Elon for getting elected and everything. And if Elon's mad, Elon's mad. I don't think Trump's a deal maker at the end of the day. So I don't think he's that emotionally attached to what Elon's saying, as long as he got what he wanted, and he did. He became the president, and Elon gave him a good $300 million to become the president. So at least it was a win for Trump, and we'll see how much of a win it is for Elon as we get FSD, robotics, SpaceX, all that stuff to progress over the coming months. Tesla right here, up a little bit in the pre-markets. All right, folks, we got 30 seconds. 30 seconds until we get into this market open. We got a lot of headlines to get through still, so we'll be talking about that as we roll out the market open. I really wish I had brought my little bell. I miss my little bell, but unfortunately, we don't have it today. Nonetheless, we'll be back on Monday to the studio, and we'll have our bell. We'll ring the real big bell for Hood, and maybe we'll ring a nice one if we actually get into the S&P 500. All right, folks, here we go. 9:30 a.m. The stock market is now open. All right, thank you all for being here. Wake your ass up. Let's get into it. Robinhood opens at 72.19. 72.19. All right, so the Hood got a red candle. It was at 74.69 in the pre-markets. Got faded as soon as we opened. It's kind of predictable. It kind of felt like that was going to happen. So you got Robinhood right here down about, not really down, but it's up 1%, but it is down from that 74 level as soon as the market opened. We'll see if that reverses anytime soon. Palantir 132.30. Palantir down about 0.65%. We'll talk more about Palantir in a bit. CoreWeave up 3.6%. HIMS up 2.7%. HIMS goes green. HIMS go green. So HIMS is up a little bit on the day. Tesla 344. That's flat. Celsius is up 0.5%. Joby up 1/3%. SMH semiconductor ETF. That's up 1%. NVIDIA up 0.5%. Not too bad. 142.22. NVIDIA. We didn't break 143 yesterday. So let's see if we break. We closed at like 142.14. So let's see if we can break above it. But 143 was what we needed to get a little higher. SMCI is up 2.4%. APLD. Wow. 12% again. This thing is already up 40% this week. If there's a headline, put it in the chat. I don't think there was a headline. At least I didn't see one this morning, but there you go. APLD up another 12%. Where is ASTS? ASTS is up 5%. 26.44. That upgrade to 49.50 this morning got the market excited. It seems like, and speculation over Jeff Bezos becoming an investor also is getting the market excited at 5.4%. Grab right here, 501. That's up about 0.5%. S&P, wow, 597. Dude, do we see 600? Do we see 600 on the S&P 500 today? VG is up another 1.82%. It was up 15% yesterday, up another 2% today, 1454. This is now officially a double from the lows, right? It was at the lows, it was at 675, more than a double. So if you got it anywhere around that 7 range, you were up 100% on Venture Global. Dutch Bros right here up about 0.5%. The Q's up about 0.33%. Archer's up about 1%. Archer was down 15% over the past couple of days. Oklo right here is up about 1%. Not too bad. NVDL, that's 2x leverage NVIDIA. That one is down a little bit on the day. Venture Global again up 1.54. Robinhood goes green. Robinhood goes green. Okay, Hoodie right here going green. I think Broadcom has earnings tomorrow. I will not be able to cover it live, but Broadcom does have earnings. This one's basically at an all-time high. Minus 1 or 2%. So that one is doing pretty well. Robinhood again, slightly going green. It did go red, 71.68. I would not be surprised to see Robinhood fall back into the low 70s. But I also wouldn't be surprised to see a reversal on that S&P inclusion potential. Tesla right here goes red as well. S&P still green. Grab 502. Palantir, I believe, is red, 131. Palantir. Oh, by the way, Palantir had all-time highs yesterday. I wasn't live to see it, but ironically, I was at the Palantir booth and I was looking at the stock. I was like, oh, wow, all-time highs. So we did hit 135.28 yesterday, which with all the Jon Stewart's of the fact that the Daily Show is talking about Palantir. This is insanity. By the way, I read the New York Times article yesterday, so I'll give my thoughts on it in a little bit. But I mean, it just really does feel like some manufactured type of nonsense when it comes to this Palantir narrative. But still, stock hitting all-time highs yesterday was pretty incredible, as well as HIMS up. HIMS is up 5%. Not bad. Not bad on a HIMS. So there we go. Red Cat drone company. That one's getting some love. That's up 8.6%. They Venture Global 4.4. That's back-to-back days. Yesterday 15, today up 4%. So basically up 20% in the past 2 days. Robinhood is still holding on to some of its green. Grab at 503. S&P 597.50, trying to go for that next level. Nebius 2.2. 2.5 on that one. CoreWeave, are we still at 150? We are at 153. CoreWeave down from 160, but still green on the day. CrowdStrike still dumping. Yeah, this one's weird. I got to go deeper into the earnings to see why it's dumping. It really reminds me of Palantir, though. Good earnings, not phenomenal earnings, and market dumps it. But this is a stock like Palantir that's always going to be expensive, and it's hard to necessarily fade the thesis for the long term. Again, Palantir yesterday hit 135.28. So even in the midst of all these different articles last night that were going viral, all these tweets, freaking Patrick Bet-David's covering Palantir. I mean, like the story is almost becoming one of these stories that like everyone's just latching onto because it's the current thing to talk about, which is actually good to me because that means that it doesn't really have legs. It's not a real story. And so over the next month, we'll see if the story has actually any momentum. But if it doesn't, then this is a temporary thing. And the fact that the stock is hitting new all-time highs in the midst of that just means that it's not enough to really hurt or tear down the company. NVIDIA right here, 141.63. That's up about 1/3% right now. Where is Tesla? Tesla's still red. Tesla is red. AMD, that one is green slightly on the day. HIMS, ASTS, and VG strong for them. Where's SoFi? I did buy SoFi yesterday because one of you guys gave me a super chat, 13.55. Now, look, what I will say about SoFi, this is weird. Yesterday, every fintech was up. Hood, Affirm, Block, all of them. And SoFi was down. Where's PayPal? Is PayPal green? Even PayPal's green, dude. It kind of like, I'm pretty sure some of you guys feel this as well. It kind of feels a little manipulated or algorithmic that SoFi's the one fintech that's not going green. And that to me is that's not a narrative thing. That's not like a Anthony Noto issue. That's like, hey, the entire market's pumping and this stock is not moving. What's going on here? Like what hedge funds are holding it down? Like what's actually happening with the stock? So I think there might be more to the story here, or it's just people don't care about SoFi, which could also be the case. But it is weird, dude. You would think on a green day like yesterday, you would get a little bit of I mean, dude, we had a green day yesterday, but it's like SoFi doesn't want to wake up until September ends, which is incredible, right? Because you're having all this momentum across the rest of the market. So that was just weird. That really was weird to see it. S&P 500, 597.75. That's up 0.25%. SMCI up 3.2. You got Costco that's slightly red. Zscaler that's up a little bit. ELF up 1.3. Estee Lauder up about 1.28% as well, which is not too bad. Where is Meta? Meta today, wow, 1.5. Meta 676. Meta 676, not bad. Is HIMS trying to get to 60 again? HIMS? Are we getting there? Holy crap, dude. 8%. My goodness. See, this is why I bought it yesterday. Honestly, I bought it because I was like, if you're going to go up 20% and then go down 20%, that's got to be some level of an opportunity. That's just some weird stuff happening with shorts or algorithms that doesn't really feel like it's a it's a meaningful up 20%, down 20%. Like that, and it was actually down 23% because it ended the day down 3.5%. So that definitely did feel manipulated as well yesterday. And you're starting to get a little bit of respect for that acquisition. 58.42 on HIMS right now. VG, are we still moving on VG? VG's up 6.3. VG's up 6.3. Shout out to Robert M, who actually got my joke, waking up till September ends. I think you guys were so obsessed with HIMS, you didn't realize I said, like, even though we had a green day, maybe SoFi's not going to wake up until September ends. Robert, I appreciate you, man. Thank you for recognizing talent. I just appreciate that. These people are so obsessed with their freaking VG and their HIMS. They had no idea that, like that actually made a really meaningful joke at that moment. But it is what it is. All you guys just care about money. I get it. It's just money makes the world go round. PayPal, 71.88. HIMS getting a red candle right at 59.29, 57.70. And then VG, 7%, baby. VG not stopping. For those that don't get it, Green Day made a song called Wake Me Up When... No, it's called... What was it called? It's called Wake Me Up When September Ends, right? Is that the name of the song? I think it's a long-ass title. I think that's the name of the song. But yeah, they made a song called Wake Me Up When September Ends, right? Like, or is it called September? No, it's Wake Me Up When September Ends. Okay. See, I made the joke and I didn't even know what the name of the song was. But yeah, that's the point of the joke. All right, VG up almost 9% now. That's not stopping. SoFi down 1%. CrowdStrike down 7%. Palantir down 1.7%. Robinhood back to 72. Grab 506. Maybe we break out above 5. I do have some new DD on Grab that I'll show you guys in a little bit. But Grab right here at 506 up about 1.4%. AMD 117, and then HIMS 6.7, kind of fighting for that 59 range, but 57, 58 currently right now on HIMS. Triple V, thank you for the $100 super chat again. Thank you for being here, sir. You do not have to do that. Really appreciate you. Again, no one knows who Triple V is, and it's always great when you guys try to guess. But let's just say he's been pretty happy about Robinhood's price action because he has a lot of Robinhood. And when I mean a lot, I mean like millions of shares of Robinhood. So thank you, sir, for being here. And some nice price action on Robinhood over the past couple of days. 71.91 on Robinhood. Where are the airlines today, by the way? United, dude, up about 81.25. JetBlue, again, JetBlue is 20% short, and JetBlue had a United partnership last week. That's at 522. I think it's up from 470. So not too bad for JetBlue. United, my internet yesterday was great. My internet yesterday was great. Like, I was able to watch Tanner live on the plane, and I was able to stream it. And the only reason I think is because of Starlink. Like, I was expecting to not have access to the internet, at least to not have access to like YouTube and videos and stuff and Netflix. And those hours flew by because I was able to use YouTube. So shout out to United and Starlink. I mean, they really ramped up the internet. This is the first flight where I've been able to actually like watch a stream live. Theoretically, I could have gone live. Like, the internet was that good. I was really surprised. SharpLink Gaming, by the way, that company that invested in Ethereum Treasury, that's up 18.3%. But yeah, very good for United, 81.25 right here. And again, the airlines are going to get more momentum as oil prices continue to stay below 65. That's just going to be great for their input costs and their margins. So that could be a tailwind for these guys as well. HIMS right here, 57. Robin at 71.77. Meta 678. Where's Googs? We haven't looked at Googs. Googs is 167. Google basically flat on the day. Oh yeah, Needham raised their price target to 65 from 61 for HIMS. VVV is Howard Lutnick. Oh my gosh. But HIMS, what is the difference between the Bank of America guy and what is the difference between the Needham guy? Because the Bank of America guy just doesn't like HIMS. But the Needham guy is like, hey, 65. Like, how is the Bank of America guy saying 58 or sorry, 28 or 25, whatever he has, and the Needham guy is like 65? I feel like there's a weird disconnect right there between two analysts. And I'm wondering, is it like a Palantir where we had Rishi and then you had Mariana? And is this Bank of America guy the Rishi of HIMS? Because that's a weird dichotomy. Usually price targets are relatively within a couple percentage of each other. This guy has 100% increase on his price target. The other guy is 28. And that was just weird. That was weird to see that yesterday. VG right here, 10% on the day. Venture Global, there you go. 10% up on the day. VVV is Amit's mom sending money for him to move out. This was the best one. We have to rank these triple V comments. We really do. I think this is like top 3. this is actually top 3. Ironically, I'm actually going to be sending my mom money because the reason she wanted to sell 100 shares of Hood yesterday is because she wanted to pay off her Chase bill. And I was like, no, I will send you the $7,000, but you're not freaking selling Robinhood right before S&P inclusion to pay off a bill. Like, we're not doing that. So she's like, oh, I should sell some shares to pay off the bill. I was like, no, you got to see this. We're so conditioned to think we have to pay off all this stuff. But as investors, like, you don't sell your assets. You only sell them when you really need to sell them. To pay off a bill, you find a way to get the money to pay off the bill. You don't sell your assets, especially not before they have a chance to get into the S&P 500. So, and we're going to see on Friday. We're really going to see, because if it does, maybe Hood is much higher than 72 after Friday. 72.14 on Hood right here. Hims 58.12, Meta 678, Googs 167, and then VG getting a bit of a red candle from almost 16. Now it's up 7.7%, but still relatively green on the day. Palantir below 130. Palantir below 130, 129.76. 129.76. Coinbase is 260. That's up a little bit. Where's MicroStrategy? MicroStrategy was up 5% yesterday. MicroStrategy 384, and then Bitcoin. Yeah, Bitcoin's relatively flat, 105. 105 on the day. My uncle in the chat, right? Dude, as soon as he saw that screenshot, he texted our group chat. It was like, hey, your son's making fun of you again. She was like, I know. That's all he does. He just finds a way to make fun of me. It's my mom and my sister, bro. They give me such good content. Like, how do I not put that out there? Like, as a content creator, you need inspiration for content, right? Like, and the best inspiration is the people closest to you. And so, Robinhood's mooning yesterday. She's like, hey, I'm going to sell. I'm like, what are you doing? Like, what are you talking about? Like, no, we can sell some covered calls, but like, we're not freaking selling our shares. Mind you, again, our average is 37. So the part that annoyed me is just like, oh, I'll just buy it back lower. I'm like, Mom, I don't know if we're going back to 37. Like, I don't even know if we're going back to 50. So the whole buy back lower thing is not easy. But then again, she's a new investor. I said the same shit 5 years ago. I was like, oh, I'll just buy back lower. It's like, that doesn't always happen. Sometimes it does when you get like an April 18% drawdown, but you have to be really good at timing, which most of us, including myself, suck at. NVIDIA right here, 140, 140. Let me check resistance on 140, on 142 on NVIDIA. We were there in the morning and then it came down. Oklo as well, getting a little bit of a bid. NVIDIA's wall is not at 142. It's at 143. The amount of shares that are up there, 381,000. 381,000 for NVIDIA. I thought you were moving out. Yes, I am moving out. People are just joking around. I'm moving out in August, but that was a good comment. Mom's sending you money to move out. That's who Triple V is. That was a good one. Google right here, 167. Okay, we do have some Google upgrades and downgrades this morning. Let me pull this up right here. Okay, so Cantor Fitzgerald, they said neutral. They said neutral on Googs. Let me know if you guys agree with this. They have a 170 on Google. By the way, who's buying Google right now? Who's buying it? We're back below the prices of IO event. IO, we bumped up to 177. Now we're back at 167. Who's buying Google and who's buying it hand over fist? Who's buying it with supreme confidence? Cantor Fitzgerald said you should be cautious because the core business remains strong, but the risk from mobile distribution and the AI interface disruption is rising. We heard about their Perplexity, Samsung, and Apple deal yesterday. The analyst said, should Google lose pre-installs of Samsung, fiscal year 2026 EBITDA could be impacted by 3 to 5%. More importantly, sustained query declines may emerge if Google fails to match Perplexity's AI's delivery over time. And they're assuming a 40 to 50% search share loss on Samsung. That's kind of wild to me because Perplexity is a $15 billion. The fact that Perplexity is the company that the analyst is worried about when it comes to Google. Either the analyst is stupid or either Google really is dropping the ball and they're letting Perplexity, at least even from a perception perspective, get people to think that Google is not going to be a dominant force. Which is, I don't know. I mean, we're really going to have to see how the market thinks about it. But I was surprised when I read that this morning. I was like, they don't make any money. They're losing like the fact that they're afraid that Google search could be disrupted by a young, hot AI startup, which is typically how it happens, but still, it's pretty incredible. All right, we got PMI. We got PMI, folks. Let me pull this up real quick. We got it just 1 minute ago on the wire. We have services and we get services at 10 a.m. We got global composite and we got manufacturing. All right, so global composite PMI was 53 versus 52.1, and then services PMI was 53.7 versus 52.3. That's actually really good, dude. Holy crap. This economy is not slowing down, bro. At least not from these numbers. Market won at 52.1. We came in at 53. This is very similar to what we got 2 days ago. And then 52.3 on services. We got 53.7. It's not going to help with the rate cut, but it's definitely not signaling that there is a massive slowdown happening. S&P 500, there you go. We're green, 597.77, up about a third of a percent. If we had this economy with a bunch of rate cuts and no threat of tariffs, we would see a bull market that the world has never seen before. The problem is the tariff threat makes it really hard for J-Pow to cut, because I agree with Kris yesterday. J-Pow probably would have cut at least once, if not twice, if we didn't have the tariff threat. And the other problem is that there is no real inflation when you look at housing and auto insurance and oil prices, all that stuff. But if tariffs make consumer demand slow down, that's when J-Pow needs a lever, and that would be his rate cut, which is why he's waiting. Now, we don't know if that's actually going to play out. We'll see in the non-farm payroll numbers how bad the tariffs have been for the month of April. By the way, this is an important number because this is the first non-farm payroll read for the month of May, which is the first real month where we had meaningful tariffs. And so we'll see if it had any actual effect. But if we didn't have the threat of tariffs, J-Pow would be cutting, and this economy, I mean, we would be at like probably 6,400 on the S&P already. Because earnings growth is amazing. The discount rate on all these DCF models would start to come down as the risk-free rate comes down, which means growth stocks would get a higher premium. And growth stocks already have been doing well, which is funny because growth stocks are really doing well because of retail, not because of big money, which is what makes this even more exciting, that we have restrictive rates. We still have tariff threats, but we have equities not at all-time highs, but a lot of them getting close to their all-time highs. And the main beneficiaries have not been smart money. It's been retail. And if smart money jumps in and we get rate cuts and we get more trade deals, I mean, who knows where this goes to by the end of the year? But it does feel like we are heading to all-time highs. And the question is just going to be if that plays out the way that it needs to play out. Peter, thank you for the $10 super chat. I work in the search engine industry. Google gets most of its revenue from search, and I can tell you without a doubt, Google traffic on all of our clients' websites, it's down 70% on average. I mean, look, it is what it is. I mean, just anecdotally, I've said this over and over again, but I'm using ChatGPT and Grok way more. And I'm actually getting sources inside of ChatGPT. And I'm clicking on the sources. So like there's this new thing called GEO versus SEO. I think you guys, Peter, you probably heard of it because you're in the industry, but it's like generated engine optimization versus search engine optimization. And people are trying to figure out, hey, if I have a restaurant, how do I get ChatGPT or Grok or Llama to show my restaurant when someone types food near me or Mexican food near me and I have a Mexican restaurant? Because maybe they're typing that more on GPT versus Google, right? Now, I don't think that's the death of Google, but from a perception perspective, obviously that could be something that the street is upset about. CrowdStrike, where is CrowdStrike? Are we still down? CrowdStrike is down 7%. Look, I'm not buying the dip on CrowdStrike because although I love this company and I think they're incredible, and I did own them at like 200, 250 back in August of 2024, I sold them like at 320 after that. I do think they're expensive. And like, if I'm going to buy an expensive stock, I have to have a lot of conviction on it, right? It's like a Palantir or a Hood, right? Like if I'm buying them, I just have to believe in them so much. At 450, bro, I don't love that entry on CrowdStrike at all. Now, granted, I don't think you're going to get 400 or 390, but I also don't love getting in at these rates. But I think this dip's going to get bought up. I don't think anything they said is a structural thesis breaker. And also, it's kind of logical. I mean, Palo Alto did the same thing, dude. They fell 8% after their earnings because their guidance was a little bit low. Same thing with CrowdStrike. Same thing with Fortinet. Fortinet had a, did I say Fortinet? I was trying to say Fortnite. Fortinet, I think their operating margins went up, but the guidance on the operating margins in Q2 went a little down, and that's what hurt them. So it's kind of just following all the other cybersecurity stocks as well. Where's HIMS? Are we still at 59? We are at 57. All right, so that's up 5.2%. Robin at 72.35. United 81.29. SoFi 13.48. That's down 1.4. Tessie down 2% on the day. We did have some registrations from China that were up month over month, but down year over year for Tessie. They sold 61,000 China-made EVs in May, up 5.5% month over month, but down 15% year over year. Again, Q2 earnings is not going to be pretty, just like Q1. But Robotaxi launch is coming soon, so that is going to be the narrative that the street cares about. Palantir right here, down about 2.64%. Grab 510, getting a little bit of love on Grab, 2.2%. That one's going a little bit more green. NVIDIA right here, 140, that goes red. Navitas is up 1.5%. SMCI also losing its steam. NVIDIA going red means all the semis are starting to lose some of their momentum. Broadcom is up a 2%. Broadcom still holding on. And then TSM right here also up 2%. So Broadcom and TSM holding on. SMCI, NVIDIA, and AMD going a bit red on the day. Does Steve like Fortinet? Steve sold out of it at like 70 last year. But he does like it. I think he wrote it from 50 to 70. Do you know the Gemini traffic, YouTube Music, YouTube TV ads traffic? So look, I've been saying this for the past couple months. I agree with all of the other parts of Google's business, but search ads have been declining for 5 quarters in a row. I'm going to keep saying this because it's the number that every bull has to pay attention to. In July, when they report, if that number is not 13.8%, which was the Q2 2024 number, there will be the 6th consecutive quarter, 1.5 years of their biggest business declining year over year. And so you can point to Waymo, you can point to as many things as you want. That is what the street cares about. Like the same thing when we talk about SoFi. You can point to all the growth you want about SoFi, but if there's not tech revenue growth, if it's only banking growth, then the street's not going to respect it. And so I'm not saying the street should be pricing Google at these levels. This Google should be at 190 minimum. But if that's the argument, and that's the thing that keeps getting worse or could keep getting worse, then I don't know if that's alpha. People say, oh, that's my alpha. Maybe that's your alpha, but maybe that's just like a narrative that's not really going to result in any momentum. And I think that's the thing to keep an eye on when it comes to Google. Also, Gemini sucks, bro. Gemini sucks. That's my own personal opinion. Gemini sucks. As a chatbot, it sucks. Maybe the APIs on Gemini are way better, right? So people are plugging it into like enterprise workflows. It's really good, but I cannot use Gemini over Grok. Like it sucks, dude. And there's all this whole, personalization. Like there's no personalization, bro. Like I need good answers. I need them quick. And Gemini is just not doing it for me yet. I'm not saying I'm never going to use it again, but it's just really hard to use it over Grok or ChatGPT right now. Amid big reason Meta grew was because they could charge much higher for targeted ads. Google has been doing the same even with lower volume growth. Yeah, look, that's fair. Look, if revenue goes up because the amount they charge per click is higher because of the quality of that click, then no one will care about search volumes, or at least it won't be as big of a bear case. But, they have to meaningfully show that. And it has to happen on a percentage basis, not just on it. Like the percentage needs to increase year over year on search revenue, not just the absolute dollars, because of course the absolute dollars will increase because it's a big business. But if that growth rate decreases, that's the issue. Again, I just don't think that's the death of Google. Just as a stock, right? We're talking about the stock itself. Like at 167, is it a good buy? That is the underlying problem that I think some people have with this. And I think that's what the street is trying to figure out right now. Palantir, we are down 4% to 128 on Palantir. I don't think there's any headline on Palantir. Let me see if there's anything. But that is getting dumped right here. Now, NVIDIA is going down as well. So we got a lot of growth stocks going red currently right now. Again, I will say this over and over again, dude. As much as everyone wants 140 and 150 on Palantir, it's the fact that it's holding 100. We all need to be very grateful for. Like this is a $300 billion company. Like we need to be very grateful that we are holding on to these levels. We got another earnings coming up. We're going to have to put up some really good numbers to be able to keep these multiples. So I would not lose sleep at night if Palantir falls back to 100 because I know that it is an expensive stock, but I also think that it has done a good job normalizing these levels. And those levels could be not normalized if people say, hey, they want to take some profits, which is fair. Same thing on Hood, dude. Hood could go back to 60. It could go back to 55 if people want to take some profits. It is what it is. These stocks have done very well. So a 3-4% decline here and there, you just got to be able to stomach that. Like that's just not something you can be super upset about on any of these high flyers. Same thing with HIMS, dude. If HIMS really goes back to 50, although people will be upset, even though I'll buy that dip, this thing was at 25 like 4 weeks ago, right? So it's still up a double, even if it's down from that 60 level. Amid, has Grok been sending you its backend code when asking me for something? It's been doing that for me. No, that's probably a bug. That's probably a bug that it's having. It hasn't done that for me yet. Granted, I didn't use it a lot yesterday because I was out the whole day, but I have not seen that particular bug. S&P 597.45. We hit 597.95 at one point. We were very close to 598. Let's see if we can continue to get some momentum on the S&P. Did you talk about Grab already? I did not. Okay, so there's no Grab news. The only thing I was going to share on Grab, 509 up about 2%, is I was just looking at some more of their data last time, and there's not anything specific. We talked about the big news this week was that they're entering into the Singaporean markets when it comes to when it comes to insurance premiums. And so for motor vehicles, that's a $400 million market, and Grab is getting into that, which is something that's important. But what I was looking at right here is from a post that Gab Growth on Twitter, he posted. He's also a big Grab bull. Advertising revenue. So this is something we don't talk about a lot, but in Q4 2024, Grab ads grew 60% year over year, and it's doing about $220 million on an annual run rate. The reason I think ads might play a bigger story towards the rest of the year is because if we get the GoTo acquisition, there are hundreds of thousands of merchants in Indonesia that operate with food deliveries that are now going to be integrated into Grab ads, which is massive because ads are a super high margin business. By the way, Grab gives a lot of loans to those merchants as well to be able to pay for ads and deliveries and all that stuff. And that could add something really meaningful to the bottom line because ads, because they're high margins, Grab has crappy margins. You get a high margin business and you add hundreds of thousands of merchants onto that business. That could be very beneficial for them. And number two, Grab's penetration of the advertising market, again, trailing at that 60% revenue run rate, is very exciting because if they can get that to outpace financials right now are growing a little bit more than ads, then I think you have two high-level businesses, high-level margin businesses, financials and ads, that are better than deliveries and mobilities. And when I was running the numbers last night, that can get your adjusted EBITDA margins up about 10%, which immediately re-rates the stock. And I think the stock already should be around $7, but that really helps it. So that was the only thing I was going to share. There's no kind of new due diligence, but I do think that the time is coming. It's just you gotta be a little bit more patient with Grab. But the toots have loaded up. Howard Marks loaded up. Ray Dalio loaded. I mean, when you look at this stuff, it's just a question of, all right, Robinhood, you have to wait 2 years when it was at $10. Palantir, you have to wait 2 years when it was at $7. Some of these names you have to wait. The good thing about Grab is that it's been consolidating for 4 years at $3 to $4. And so I do think when it breaks out, it can be an aggressive breakout. TSM right here, 201, that's up 2%. Broadcom up 1.78, and then HIMS up 3.8, losing that 59 level, but still at 56.81. Currently right now. Did you buy a lot of HIMS? I bought 350 shares yesterday. 350 shares of HIMS. Okay, so the Circle IPO, is that tomorrow or today? That's tomorrow, right? Apparently, from the headlines I was reading this morning, the Circle IPO is 25x oversubscribed. 25x. And they're IPOing at around 6.7 billion market cap. I think there's going to be a pump on Circle, bro. Just based on the whole crypto dynamic of it, I think there will be a pump. And I don't really understand the business that well, but if they are IPOing tomorrow, I do think you might get a bit of a move. It's one of the more exciting IPOs of this year, especially because the stablecoin legislation just passed Congress or just passed the Senate 2 weeks ago. Celsius right here, 39.51. NVIDIA goes red. Palantir and NVIDIA both going red together. Palantir, 128.52. Down 3.5%. S&P still holding on to its green, though. 597.56 currently right now. All right, 10 a.m. We're going to get some ISM data. We just got it. Market wants 52. Let me see. The number should be out in like 10 seconds. The number should be out here in 10 seconds. What do we got? 52. Number is 49.9. 49.9. All right, so that's a little bit of a miss. S&P is down. Yeah, there you go. There's the red candle. There's the red candle. Let's see how quickly that recovers, or if it continues to stay red, or if that just keeps going downside. But S&P is red. Okay, so here's the data. Services 49.9 versus 52. That is a miss. Business activity 50 versus 54. That's an aggressive miss. Employment 50.7 versus 50. That's a beat. New orders 46.4. Holy crap. Versus 52.6. And then service prices 68.7. Okay, so these are two really not good numbers. The number of orders went down from 52.6 to 56.4, but the prices of orders went up from 65.7 to 68.7. So you got the prices going up, which is tariffs. That's not good. And then you got the volume going down, which is the number of orders, which is also not good. 46 versus. That's ugly. Does the market react? Dude, right back to 597. Holy crap, market doesn't care. at least for a second, the market doesn't care. 597. Right back. Right. Wow, dude. That dip, I mean, maybe it continues to go down, but that lasted for like 2 seconds. 597. Got to 596 for even HIMS. down a little bit, but then you got your green candle right there. Palantir still down 3.7%. Where's Meta? Where's Meta? Is Meta up? Wow, Meta's green. Dude, Meta, not that far away from 700. Not that far away from 700. Yeah, it was a 2-minute dip. Less than a 2-minute dip, dude. It was low. All right, let's get some of this coverage on the economic data, and we'll keep going from there.
Issue is our May reads for ISM services PMIs, and here they are. 49.9. The headline was supposed to come in at 52, expansion territory, but instead it moves to contraction under 50. And the last time it was under 50 was June of last year, and that's when we comp to on this number. If we look at prices paid, the opposite. They're moving higher from 65.1 to 68.7. That's definitely warmer than we expected. That's the hottest prices paid since Nov of 22. But the market certainly seems to be more focused on weakness than the inflationary implications of prices paid. New orders, 46.4. Once again, back in contraction mode, and that's the weakest all the way back since D's of 22. And finally, on the employment front, and this is important because we had a weak ADP, and of course, Friday we have the big jobs report. This one climbed over 50, 50.7, the best since, well, just Feb of this year. But indeed, we retook expansion territory. Now, as we sit at 440, we're literally exactly down a half dozen basis points on a 10. Carl, back to you.
All right, Rick Santelli, thank you very much. Meantime, some new data from the New York Fed this morning. A survey of some 300 businesses found that for those facing tariff cost increases, most pass.
All right, so that was the data. By the way, guys, let me know if the mic is good. If not, I will change it. But markets kind of don't. I mean, S&P's struggling to stay green. It is red from 597.95 at 596, but it's not dumping. Mike's good. Okay, cool. Meta was up 2%. Meta's kind of holding on to that 2%. I don't know why Meta's up today. It looks like it's getting a little bit of a bump from yesterday's energy stuff, but I think there might be a different reason. Meta, again, close. I mean, $20 away from 700. This thing was at 480 in April. So pretty incredible. TSM right here is still up 2%. CrowdStrike is down 6. It was down 8. VG was up 7. Now VG was up 10. Now it's up 4. Robinhood just below 72. SoFi down 2%. Tesla down 3%. CoreWeave was up 10. Now it's up 1. So a lot of these names, although they're not red, they are losing a lot of the green. NVIDIA right here, 140. And then HIMS, 5602. HIMS was almost at 60. Now it's losing. And then Palantir down about 5%. There you go. 126.80. Palantir getting a bit of a dump. We'll talk more about Palantir in a bit because I saw some stuff yesterday that we'll talk about, and we'll talk about some of the brand stuff going on with the surveillance state narrative or whatever. But Palantir right here definitely getting a little bit of a hit after hitting all-time highs yesterday. Also, though, I mean, again, you hit all-time highs yesterday after basically hitting all-time highs the Friday before. Now you're down 5%. I mean, again, it's just heavily momentum driven. And I think you got to have the stomach for 135 to 125 within a day, because that's really what has happened over the past 2 weeks. I mean, last week on freaking Friday, we were up 7%, right? A lot of this is driven by people entering into the name that are just discovering the name, and that's going to create some more volatility. S&P 500 right here, 596.79. That's up about 0.11% on the day. I just got 2 screenshots by Mr. Triple V, so I will report to you what he did. 1 million shares of Grab at $4.99. So we got 1 million shares of Grab at $4.99 today. And this one's going to make a lot of you guys happy. 100,000 shares of HIMS at 55. 100,000 shares of HIMS at 55. So those were the purchases by Mr. Triple V. 55.57 right here. So he's up a little bit on the HIMS, and Grab, he's up about 5 cents. We got 1 million Grab and 55,000 shares of HIMS. It's fun to have money, bro. It's just fun. Like, just imagine having an account where you can be like, oh, let me just buy 1 million shares, swipe up, and then or like 50,000 shares of HIMS. So there you go. Amit is his financial advisor. No problem. That's true, bro. That's true. Dude, now, no, you guys are the financial advisor because I bought HIMS because of you. If Grab goes down, I'll take that L. I will take that beating. But if HIMS goes down, this is your guys' fault because I bought it because of you guys. And if he's buying it because of me and I'm buying it because of you, and he's buying it because of you, that's how the transitive property works. And if that's, see, I know a little bit of math. And if that was the case, then this is your guys' fault. So no, but I think Hims will be fine. I think Hims will be fine. And I do think if it goes below 50, you know, Triple V, from what I know about him, he's the type of guy who buys the dip. So I don't think he would be that upset if we go below 50. He would probably get excited to buy some more. Kris is saying Triple V should buy some VG. He doesn't tend to invest in gas, dude. He's a tech investor, from what I understand. I mean, you know, he invests in some other areas, but he's heavy into Mag 7 tech. I mean, those are the names that he's enjoyed for a long time. Although he did like Baba a while ago. So there's some of that value investing in him as well. Why is Tesla down? I don't know, dude. I don't know why Tesla's down. Wow, Tesla. Well, you know, I think Tesla's down because Palantir's down. Tesla and Palantir together down 5%. Again, momentum. Both of those getting hit at the same time right here. Amit, are you streaming Bank of America Securities Technology Conference with Jensen? I didn't even know that was happening, so no, I probably will not. But I'm sure someone on YouTube will be streaming it. I didn't even know they were doing that today. I'll make sure to listen to it so we can talk about it tomorrow. But yeah, I had no idea. It's probably happening like 2 p.m., right? Should be around that time. Yeah, Circle IPO subscribed more than 25 times from Bloomberg. It does feel like that one's going to be a pretty big IPO. Yeah, I think that's gonna be a big one. Palantir 125.90 down 5%, then Tesla. Dude, it really does feel like Palantir and Tesla are falling. And honestly, Hood would be following them if Hood didn't have S&P inclusion. Hood is only down 0.5%. If Hood did not have S&P inclusion this week, I think Hood, Palantir, and Tesla, all three of them, would be down. And Hims, there you go, 54.92. That one's falling as well. The momentum trade is characterized by a Hims, a Tesla, a Palantir, a Hood, and probably an AppLovin. If those go down, that's momentum. Yeah, AppLovin as well, down about 4% from the highs. That one also, that just means that market's losing some steam, at least currently right now. But again, that's not necessarily a dump. You know, a dump is like more aggressive in terms of the entire market's taking a crap. S&P down 0.05. That's not really a dump when it's individual momentum names. But then again, the reason you like momentum is because Tesla could go up to 370 one day, or Palantir could go up to 140 one day, right? So you got that, the stomach you have to have for these names to get those types of gains. This is why Triple V likes them so much. I mean, he's a risk taker. He came to America with nothing. You know, now he's worth billions. He's the reason he does it is because he goes all in. He takes risks. This is what he likes. And so he likes the swings up and down, like a lot of us do, even if we're not playing on that scale, because the only way you get real gains is like, you take risks in pretty high beta names. Now, obviously those real gains can happen in other ways, but for the majority of growth stocks, you got to be ready to deal with some of the volatility. Like, Apple is not going to go up 10% intraday or down intraday, but there's a reason why Apple's not growing as much either. So Google right here at 0.38%. That one's close to going red. Tesla taking it on the chin today, down 4.3, and then Palantir down 5.5. Hims goes red. There you go. 54.70. Hims also goes red on the day. Okay, so let's ask the question then. Let's ask the question right here. Given we are officially seeing some red today, which is, and we'll try to get some other coverage. Do we end June red? What do we think? Yesterday, super euphoric. Everything was green. Everyone was excited. We're going to end June at all-time highs. Today, starting to see a little bit of weakness. Do we feel the same? Do we feel the same about June? Robin right here, 71.61. SoFi down 2%. AMD down 0.5%. And then CoreWeave right here. Even CoreWeave, it was up 20% yesterday, down 2% today. It was up 10% in the morning. CoreWeave, you can't complain if you bought CoreWeave anywhere below 120, which most people got it way below 120. But at 148, it's down from that 165 level that it was at in the morning. My options got destroyed. I continue to believe it's a covered call market, bro. I really do. I think buying options here is a little scary unless you're super bullish on the stock and you have a lot of time for it to play out. So I do think that covered calls are not the worst thing here. But again, with option timing, like if you bought hood calls that were expiring on Friday, last Friday, and you sold them yesterday, you made a crap ton of money. You probably made 4 or 5 extra money because even those $80 calls were up like 200% yesterday. But, you know, how reliable is it to imagine there's going to be a move like that every time? It's just hard, right? You never know. So I still think selling the covered call is not crazy to do this year. Apple ripping. Are we actually green on Apple? Well, the market goes red. Apple 205. That's up 1.2%. So Apple not having a horrible day. Meta is still holding on to 2%. S&P goes back to green. Again, this market's resilient, bro. I think one thing we've learned is this market is resilient, and a lot of stuff will try to take it down, but it's not that easy to necessarily keep it down. Let's get some coverage on the ADP employment report, and then we will keep going from there.
It's actually the weakest level in 2 years. What does this mean for Friday's jobs report? Well, there's not a really direct correlation. Some people see it as a leading indicator, but it is worth paying attention to because it gives us a snapshot of what companies are doing. And if you break that down further, you can see the job losses really came in the goods producing sectors, that 2,000 negative on that, where services producing sectors were still gaining. That tells you it's about tariffs, right? Because that's where the tariffs are. They're on goods producing sectors. It's no wonder President Trump tweeted, ADP number out, too late Powell must lower the rate. He is unbelievable. Europe has lowered 9 times. If he's making the argument to get ahead of the economic weakness and we're not seeing inflation, these numbers give him further fuel. And so do the recent inflation numbers.
Yeah. Small businesses, firms with fewer than 50 employees cut
Negative.
on a net basis. Peter Bookvar with a nice note. Should we really be surprised? Put yourself in the shoes of an employer. You can understand the hesitancy many business people have, especially small businesses that don't have the flexibility of larger firms. But we don't seriously believe that a rate cut now is going to mean anything for months, right? The transmission mechanism takes a long time.
I don't know. I mean, it goes through to the market. I mean, it could definitely, through the 2 year, you see the 2-year yield moving lower today. That's one of the ways that transmission mechanism is more immediate. Same with the US dollar, which has been weak. And that sort of eases financial conditions along with lower.
S&P green, but Tesla and Palantir are still down both 5%. If Tesla and Palantir start to recover a bit, and then I would say maybe we're getting a reversal, but we are seeing the broader market try to head back up with some green candles, but Tesla and Palantir continue basically both of them down 4.95% at the same time right now.
Lower rates. The debate is whether they need to wait a few months to see the inflationary impact or lack thereof of tariffs, or if they're getting what they need right now to say, okay, we'll move a little closer to the cut. Just more granular jobs data, because that is the other part of their mandate. And if it's weakening, they need to be careful about that. But yesterday we got the JOLTS report. So job openings, we're up, we're high. That's good. Layoffs were a little bit higher as well. But how about the quits rate? This is a good indicator, right? So if you feel confident that you can get a new job, you're going to quit your job. So that number was really high coming out of the pandemic, as you can see, above 3, because people felt like there were a lot of job openings and they could go out and get a job. It has steadily come down, and it went down again in last month's number. We're not, in recession type levels here, but it's something to watch as the Fed pays attention to the cooling off of the labor market. And that is certainly happening. We'll see if the jobs report on Friday confirms that. So far, it's been calm, but it's sort of ideal because it's a soft landing. It's not any big drop off. It's not recessionary, but there are signs that things are cooling, and that's to be expected with what's happening with the tariffs.
An interesting chart of lower highs and lower lows. Certainly for more on the market and this morning's data, let's bring in Oppenheimer Chief Investment Strategy.
All right. So again, private ADP payrolls for those that didn't catch it, 37,000 versus 114 expected. S&P back green, 597. Even with some crappy payroll data, market's not really showing that much pain here in regards to some of those numbers. The job or the rate cut probabilities for June are now 4.3%, for July, 30%. That was 24% last week. So that number is up from 24 to 30, which is nice. But again, I think resiliency is the name of this market. And we talked about it this morning. Hedge funds are taking down their shorts. They're starting to buy at the highest levels since 2023. When you look at how much they are stacking up the leverage, and you've got rate cuts inevitably that are going to come. And if they're not going to come, the market's going to be excited for when they come, which could also prop up expectations. On top of that, again, you did have earnings growth. This is like pure numbers. This is not opinion, that were 13.4% versus 11% expected. And if that's the case, then that should also be something that's, not the worst thing for the market. Is the 10-year below 4.4? That could also be helping today. Yeah, 4.385, folks. Not bad that could be getting the markets to go a little bit green right here, seeing credit markets kind of calm down at least a little bit. We haven't seen 4.3 in about a week and a half. I think we touched it like on Monday, but it's been a minute since we actually saw it come down. Now we need to keep it down, but it would be nice to keep it at these levels. By the way, we didn't talk about this 2 days ago, or no, this came out yesterday. We didn't talk about this yesterday. Trump, maybe it was on Monday. Trump sent a letter, or the White House sent a letter to all their trade partners, and they said, hey, we want final deals by July 8th. And if we don't get those deals, there's going to be consequences. So it does seem like from a trade deal perspective, the White House is saying, hey, it's time to get these deals to get done. This is what the press secretary had to say about that yesterday.
Reuters was reporting that there is a letter that is meant to be sent to other countries, which would give these countries a deadline of Wednesday to produce their best offer on the trade matter. Why does the administration feel the need to send this letter? And I have one more follow-up on trade.
Sure, I can confirm the merits in the content of the letter. USTR sent this letter to all of our trading partners just to give them a friendly reminder that the deadline is coming up. And they are in talks. Ambassador Greer, Secretary Bessent, and Secretary Lutnick are in talks with many of our key trading partners around the globe. As you know, Brian, I know the Wall Street Journal has covered this quite heavily. And they continue to be engaged in those discussions. And this letter was simply to remind these countries that the deadline is approaching and the president expects good deals, and we are on track for that. I will emphasize.
On the trade side, though.
Okay, so I will say it does feel they might be losing a little bit of leverage right here if they have to send a letter to all these countries and be like, hey, make sure we get the deal done. I mean, I don't know, dude. They did say the India deal would happen when Trump came back from the Middle East. It's been almost 2.5 weeks now. There's no India deal. I'm optimistic that it's coming soon. But if we go another couple of weeks without it, I mean, we're going to get into July and the market's going to start wondering what's going on. The China talks have stalled, but Bloomberg reported yesterday that Trump and Xi Jinping will be talking on Friday. So that officially is going to be happening on Friday, and they'll be speaking. But outside of that, I mean, look, Vietnam, Thailand, all these other countries, like if they have another month to negotiate, then like, I guess hopefully in another month we'll get a lot of deals. But we haven't really heard any updates on a lot of these other deals outside of the fact that the White House sent a letter saying that July 9th is the deadline. And I wonder how many countries take that seriously. I wonder how many countries are going to be like, okay, what if we don't do it by July 9th? What are you going to do? You know, so it's going to be one of those things where we have to see how seriously the rest of the world takes it. And if this results in Trump getting even more aggressive with his rhetoric around negotiations. But hopefully we get them soon. I mean, we cannot go until the end of August without getting some more updates. Again, the only deal we have right now is the UK, and that's like a $6 billion deal. It's not even a big deal. So we do need to get some more stuff going on right now. Yeah, I am seeing some green candles. Let's look at Quantum. Quantum today, D-Wave basically flat. Again, Tess is going to be joining on Monday. So Tess, she's been in the channel for like 3 years. She's a mod. She will be joining on Monday after hours, or after the close, to discuss the bull case on Quantum. We had Skrelly give us the bear case. She's going to be giving us the bull case. She's been in D-Wave since like $1. So she's been in this name for a very long time. There you go, turning green right here. And so we're going to get her perspective as well on Monday's market close. Rigetti down about 1.2%, and then IONQ down about 3% on the day. Tesla was down 5, now it's down 4. Palantir was down 5, now it's down 4.3. That's what we got on Palantir. All right, so let's talk a little bit more about Palantir. I know all of you guys are seeing the brand stuff, the surveillance state stuff with Palantir. I am seeing it as well. Trust me, the Palantir employees are seeing it. I was with a bunch of them at the AI Expo, and it was definitely a discussion that people were starting to feel. Look, I was actually with one of the Palantir employees, and we both watched the Jon Stewart piece on the Daily Show, and he had some expert come in and talk about Palantir. I read the New York Times article last night, and the New York Times is petty, bro. The New York Times literally made their article free just so everyone could read it. Like, it's kind of like, it really does feel like there's a vendetta right here. The fact that the New York Times like made it a gift article that anyone can read for free to try to show people how, accurate their reporting is. I read the article last night. It was full of shit. Like, the article was not a good article. They interview 2 employees that don't agree with Palantir's policies. It's like, okay, there's 4,000 employees that do. Like, I'm sure there's a lot of employees at Google that doesn't love everything that Google does. And if that's the basis for your article, it's like, All right, I guess that's the route you want to go. But the point is, look, I talked to a bunch of people about it. I think that this is a coordinated attempt. This does not feel like this does not feel like all of a sudden the crazy left-wing people and the crazy right-wing people, because it's both sides, decided, oh, we both hate Palantir at the same time. Like, really, bro? Really? That just randomly happened? The Laura Loomers of the world and then the New York Times of the world both decided to be in the overlap of the Venn diagram, and in the middle of that overlap is Palantir. Are we serious? So this to me feels like some level of hatred around Trump, and they're using Palantir as the scapegoat because Trump is giving Palantir all these deals, or some level of boredom because there's no good stories to talk about because the tariff stuff is old. And they're deciding that let's figure out this big boogeyman evil company called Palantir that is gonna hurt all Americans by stealing all their data. And again, it's just not true. So there's a couple of points of action I think people can take. Number one, go to the Palantir Civil Liberties blog. I'll put it right here in the chat. I've read all of these articles. I did a Spaces with Courtney Bauman, who actually runs the entire program. Like, if you read through this stuff, they have talked about this for a decade. They are not stealing people's data. I mean, Meta, Amazon, Google have way more data than Palantir could ever have on American citizens. And not even just American citizens, on the entire planet, quite frankly. And so the idea that Palantir is the big boogeyman that's going to be taking your data, not Facebook, not Google, which knows everything you like and do, not ChatGPT that has a literal memories shared of all the stuff you tell ChatGPT. The fact that it's going to be Palantir, which doesn't even have a consumer product, is ridiculous. Number two, people are not understanding what Trump is doing. If you actually read parts of the New York Times article that discussed the interoperability of what Trump is creating, it's essentially what Elon laid out with his vision with Doge. When Elon said, hey, the computers and the IRS and the FDA and the CDC don't talk to each other, and that's a problem, he meant we need to have modern software so that we're not literally writing down people's social security numbers on a piece of paper to figure out when to give them a payment. All Palantir is doing is saying, let's connect all of these operating systems together under one unified system. And the New York Times is framing that as like some master database that's going to harm Americans. It's like, first of all, there's always going to be a database on Americans. Like, the government, every government has to have a database on its citizens. The NHS has a database on all of the patients to be able to track when their backlogs, wait times, et cetera, et cetera. Guess what? Everyone hated that Palantir was working with the NHS, or at least people in the UK thought it was the worst thing in the world. Now, Palantir got a big deal with the NHS, and it's not perfect in terms of fixing all the NHS's issues, but they're starting to make progress. We've seen this in the numbers, and they're making progress by creating a federated data platform using that database of very sensitive and confidential private data that Palantir is being trusted to be able to manage in the UK. So, I mean, that's exactly what they're doing for the United States. It's just we don't have a national healthcare system, but we have a lot of agencies that are very outdated, like the IRS. And if you want to get more tax revenue, you want to get rid of fraud in the housing sector, which is why Palantir just got the deal with Fannie Mae, you're going to need real technology and big data to work together. So these narratives, I mean, again, I've been trying, like even Jon Stewart yesterday, they had some lady who exposed that Cambridge Analytica stuff, which was a good thing because Cambridge Analytica was a really bad controversy for Meta, right? Horrible thing, 50 million people's data, all that stuff was leaked. Not a good thing. The lady started talking about Palantir and it was embarrassing, bro. Like first of all, you could tell she had no idea what Palantir did. Second of all, she wasn't even being that aggressive on Palantir as the scary company. She was trying to like back off a little bit when Jon Stewart was trying to get her to say Palantir is a scary company that's going to steal all your data. And she wasn't really admitting that because she knows that she can't really say that. And she'd probably be sued for defamation for going on national television and saying something that ridiculous because it's just not true. And given there was an actual scandal with Cambridge Analytica back in 2018 that she leaked, for her to compare what's going on with Palantir, trying to update the IRS's backlogs to be able to make sure that Americans are paying taxes, to what Facebook did, which is have 50 million people's phone numbers and addresses stolen, is insanity. It's absolute insanity. Like, yeah, TikTok is the company we should be scared about, not freaking Palantir. And so I really do think as investors, this is a manufactured attempt because people are bored. And I wonder how many legs this story has. I think in a month, we might be not even talking about this, but maybe we are. But people are bored. They need a story. The fact that Patrick Bet-David, which is this big podcaster, is talking about Palantir. Like, this guy doesn't know about Palantir. You think he's done 1 ounce of research on Foundry or the ontology? No, none of these journalists have. And there were some journalists at the AI Expo yesterday that were like trying to snoop around and trying to get like like quotes from people. And it was just like, you could just tell. And it was the same last year. Last year, we had a journalist from The Guardian at the AA Expo. And the critique in her article was the beer that Palantir served was subpar. That was her critique. It was quite hilarious last year. But she was back, and she was, all of them are trying to get quotes. We had Mike Gallagher was on stage. We had people from Hamas that, or not people from Hamas, but people that you could argue support Hamas get on stage, and they were protesting. I mean, like, I think Palantir is just a name that people want to attack because they're bored and they don't know what else to do, and it gets clicks and attention. And that is why we are seeing the narrative that is being formed right now. But it's just not true, dude. It's just not true. And there's ample amount of evidence out there to say that's true. And if you think it's true, you should sell all your shares. If you think Palantir is creating a surveillance state, then get out of the stock. Like, just sell your shares. Like, why would you want to own a surveillance state company that's going to, kill the world? But it's not true. It's all nonsense. Like, it's all nonsense. There's so much good Palantir has done in regards to illegal immigration as well. Not even just at the border, but when we talk about human sex trafficking, which was one of the reasons they were contracted by the Obama administration in the first place back in 2012. This narrative is propped up on absolute garbage, and I think it will die out. But right now it's picking up some steam, and we got to see if this steam continues to go from there. 597.63 on the S&P, up about 0.26%. Again, that ISM dip and that payroll dip did not last at all, and you got the S&P 500 trying to get back to that 598 level as well. Greg says, I'm a U.S. Army veteran and a Republican who loves Palantir. Yeah, dude, I met a lot of Army vets at the expo as well. And, they were talking about how much Palantir has quite literally saved their lives on the battlefield. We had one guy who actually works at Palantir, who used to be in the Army, and he used Palantir's software in deployment. And he was telling me about like how the software quite literally was saving his life. And now he's a deployment strategist at Palantir. I mean, like, it's just weird to me that people are falling for this narrative. And again, I think it's because people. Here's my actual reason for why I think people are blaming Palantir. People's lives are so miserable that they need to have a scapegoat to explain why their lives suck. And usually, pointing to some evil institution or evil structure that's stopping you from achieving your goals, or it's the reason for why you don't have the things you want in life, that is way easier than acknowledging, hey, maybe I need to get my shit together. And, this is something that I think all of us have been through in life. I've definitely been through it 5 years ago. I wanted to blame everything except myself. It's like, no, I'm the reason for my problems. And that's not to undermine that there are structural things in society that can stop you from achieving your goals. Like, I wasn't, born on an ivory tower. My dad and mom didn't go to Harvard. I get it. Some people have a leg up in life. I get it. But also, at the end of the day, no one cares, right? Like, you can complain about that, or you can get skills and work hard and take risks and try to figure it out, embrace the unknown, and go do something with your life. And that doesn't guarantee success, but it guarantees at least the probability of a higher chance of achieving what you want versus sitting around and blaming Palantir and their Foundry software for the reason that you're not doing anything with your life. I think that's kind of what's going on right here. Well, and it's not just about Palantir. These stories in general, from a sociological perspective, they attract people that are bored. Like, if you're doing something with your life, you're not reading about some evil boogeyman company that's going to steal all your data. Because quite frankly, you don't care. You got shit to do. You got deals to close. Like, you got networking to get done. Like, you got a flight to catch. You're not stressed out about some company that the New York Times writes about because they interview 2 employees that don't agree with everything Palantir does. So, I mean, look, from that perspective, I just think this is a stupid narrative that's being formed. Amid is being so damn biased. Look, I'm biased because I obviously support Palantir for sure. I do support Palantir. Like, I like the company, but the reason I support Palantir is because I've studied what they actually do. And every time I came across this narrative back in 2021, when I started building my position, I asked myself, hey, do I want to invest in some evil company? No, of course not. Like, I don't feel ethically good doing that. And so I went into the research and I was like, is this company evil? And the more you research about it, it's like, no, just people like don't want to do the research. And they want to form stupid Vice Media clickbait garbage headlines. And if that's what people want to invest on, be my guest. But that's just not the truth. And, as a result, that's why I think that this narrative is picking up steam, but this narrative is not real. I just don't think this narrative is real here. We care about who has our data. Should we not? No, you should care about who has your data. The question is not people. The question is not caring about people having your data. The question is about, Is Palantir the company that is going to misuse people's data, leak the data, manipulate the data, use the data for bad, et cetera, et cetera? It's like, no, that company's Meta. Like, that company is not Palantir. If anything, Palantir has been able to use the data in the most confidential and effective ways because their software is built with civil liberties and rights violations, or the ability to protect against right violations intrinsically. Meta is the company that's like, hey, let's just get all the data we want and like figure out how to make young girls feel bad about themselves by showing these unrealistic bodies in their Instagrams and make them, want to do bad things to themselves because they're not able to have a butt like Kim Kardashian. That's not Palantir. It's like, to me, this is just a ridiculous way to shift the narrative. And that's kind of, how I think this is playing out. But nonetheless, that's what I have to say about Palantir, down about 4.2%. I think everyone just has to be ready for the narrative, and I think the narrative will die out. I don't think it'll be that strong forever. But it is picking up some steam across people that, for whatever reason, they want to believe into the narrative. NVIDIA right here, 141. That one's slightly almost going green. Still red on the day. SMCI 43.21. Applied Digital, that's up 18% on the day. I got to see what headline we got on Applied Digital, but that is green. And then you got Reddit right here, 115. That's up 4% as well. Reddit getting some momentum. Baba's up 3.5%. Okay, so Alibaba getting some love as well. 118.91. That's green. And Meta is, are we still above 2%? We were at 680 last time. Wow, Meta 684. Again, those services PMI numbers, it was bad, bro. It was higher prices, lower volumes. I mean, that's the definition of bad, at least for that piece of data. That is not stopping Meta, and that's not stopping the S&P. Back to 597.70. Currently, right now, is CrowdStrike turning? CrowdStrike? Yeah, CrowdStrike was down 10, or it was down 7. Now it's down 4. So you got a green candle right there. What is the reason for APLD? They already had the deal with CoreWeave, right? This feels like a technical breakout. It doesn't think like there's a new deal today outside of that CoreWeave deal. Again, $7 billion in rental revenue over approximately 15-year period. That is why APLD is going green. Oh, I think I know why Tesla's red. Here you go. We got this headline from Bloomberg. A fatal Tesla crash shows the limits of full self-driving. Okay, first confirmed report of Tesla FSD killing someone, story by Bloomberg. That just came out right now. Jonah Story, that's the person's name, was killed on her way to work after dropping her grandkids off at school. Oh, this is a grandma. Oh, this is not good. The Tesla struck her head on with the front bumper, hood, and windshield, sending her body tumbling through the air. Wait a second. Okay, so we gotta dissect this. Did this just happen? Is this old? Why is Bloomberg saying this right now? Like, we need to get some facts straight on this. So this was published 5 hours ago. So it's definitely a new story. But did this happen recently? Did this happen on FSD 13? It's from 2 years ago? What? This is on version 11? Okay, so this is not like, look, this is a horrible thing, but this is not FSD today, if this is accurate. I'm going to try to get some more updates on this. I wonder if Bloomberg's covering this right now. Dude, if it's FSD 11, yeah, FSD 11 was not good. And I mean, honestly, every FSD before 13.2 had a lot of issues. 13.2 to me is getting perfect, even if it's not perfect yet. But if this was from 4 years ago, or 3 years ago, then yeah, you could definitely understand how bad it was, even if it was an unfortunate thing that happened. It just wasn't as good as it was last time. Tesla right here down 3.7. Okay, that makes more sense. It looks like that was the article because there wasn't really any news today. Getting Tesla go down. Yeah, milking someone who died after 2 years is a little. I mean, waiting 2 years to write that story, dude. That's a bit. It doesn't seem like it's fake news. It seems like it's a real person who died because of FSD. But if the media is reporting it 2 years later, when it's not the same FSD, I think that's a little weird. Ed Ludlow is talking about it. See, but this is what I mean, dude. Ed Ludlow's job is to get clicks for Bloomberg. And if he thinks this story will get clicks, that's what he's going to pursue, right? This is the issue. Yeah. Okay. So see, this is, dude, this is just disingenuous, bro. I agree with Elon. You do not hate the mainstream media enough. A tragic Tesla crash in Arizona raises new questions about Elon Musk's full self-driving system as Tesla prepares to launch driverless robotaxis. Could he at least have said 2 years ago, a tragic crash happened for Tesla FSD. We went deeper into the story. Here's the article. No, the headline is a tragic Tesla crash in Arizona raises new questions, which makes everyone think objectively, oh, someone just died because of FSD. Versus, hey, this was an investigative piece from 2 years ago where we went into it and we're for some reason reporting on it 2 years later. That totally changes the narrative. It's still really bad. Still not a good thing at all. And your heart goes out to someone who passed away from this. But the framing of the narrative fundamentally changes. Fundamentally changes. So I mean, I could understand that that's taking Tesla stock down, but that's really. It's really disingenuous, bro. I'm not saying don't put out the article. We should be talking about that. If someone dies from FSD, that should be well reported on. It's just you have to frame it in a way that's not making people think, hey, the latest model just killed someone, because that's just not true. I mean, I haven't heard of anything on FSD 13.2 that's been anything near anything fatal, much less an accident. Let me see if there's any coverage on this right now. That is wild. But it's so Bloomberg Tech starts in like 30 minutes. I think they're probably going to lead with that on their show. So we'll see if they do a segment there. And I'm curious who they get to analyze it. I'm curious how they make the story. Right before robotaxi sounds weird. Yeah, that's fair. I mean, dude, that's like, yeah, dude, one way to get people to not want to get into a robotaxi is by thinking that it's going to lead them to crash. And maybe 2 years ago it wasn't good enough. But over the past 2 years, we've had 4 billion miles driven in FSD. Like, things have changed. And so, like, when you don't report on things change like that, it just, I don't know, it just feels a little bit more disingenuous. Let me see if I can get some more coverage on Tesla. Let's listen to Jenny Harrington right here. She's being a little bit more bearish on this market, and she thinks it's going to be hard to get more upside. So let's get her perspective, and then we'll keep going from there. In terms of what's happening with APLD, I have no idea what's happening with Applied Digital. They had a deal with CoreWeave 2 days ago. Looks like the market is still excited about it 2 days later. But I don't think there's any main headline this morning that's causing the 12% run.
That's what I would do if I were you.
I think
you have an overall market outlook?
Well, I always do.
And?
But you need to consider the source, right? I'm
Yeah.
a dividend income manager. I'm always going to be apprehensive and cynical, which is why I like buying dividend stocks. So I'm always apprehensive. I'm always cynical. I'm also always all invested. But right now, yesterday I spent the day at NAREIT, the National Association of Real Estate Investment Trust Conference.
Yep.
And even within that, you're looking at like the healthcare REITs. And you don't want to buy all the healthcare REITs. You want to buy two.
Some of them.
Within the semis, you don't want to buy all the semis. You want to buy one or two. So you're right. I am hiding behind individual stocks. And I don't know if it's hiding behind or it's just things are changing and it's the time for active management. But when you ask me about my overall view on the market, I don't really see how we go up much more from here. And that doesn't mean I'm wildly bullish, but I listened. Oh yeah, sorry, bearish, thanks. I always say the wrong thing.
Yeah.
But I was listening to your interview with Nick Timmerose. How many times did he say, I don't know, we don't know, there's no way to tell?
Is it ever not like that, or is it worse now?
I feel like it's a little, I don't know if the right word is worse, but it's more, I don't know right now. And then Dr. Richardson, who you had on before, hiring starting to show cracks. When you have those, how do you get past a 21, 22 times multiple? I don't know.
We're already, for a while, it looked
stronger earnings growth. It's not that complicated. Stronger earnings growth. I mean, dude, we beat earnings by 2%. If we do that, I'm not saying we're going to do that for the rest of the year, but if we do, you can definitely get past that multiple pretty easily, because again, this market will pay up for growth, especially in a world where all the big AI companies are really starting to show the revenue growth and the margin expansion that people are looking for. I don't think that's the hardest thing to get past that multiple if we keep up that growth.
pretty good. What did we get down to? 20 or 19?
19-ish. Yeah.
Yeah.
Maybe even 18 and change. So that's when I start to feel good, when the multiple's great. But then on the flip side, I don't really see what derails it. You know, I think earnings were good. Companies are doing well. The consumer is continuing to spend. So I don't see this nasty bear case.
Is this number that we're looking at, though, does that assume that the tariffs are going to be taken down substantially? That there will be agreements that are...
Are we de-escalating?
Are we inured? are we a nerd? And we're just saying,
but are
who
we
knows?
assuming that these, that the next 90 days doesn't come and you're dealing with 145%.
Yeah, I think it has to assume that it's nothing near the worst case scenario.
Right.
And it shouldn't be. That doesn't make any economic sense. It doesn't make any logical sense. Nobody wins. When I was in business school, we took this negotiations class, and they would talk about BATNA. It's a goofy thing. It's a better alternative to a negotiated agreement. But it basically...
I actually learned about this in my negotiations class. Your BATNA is like the first thing they teach you when you try to figure out like the psychology behind negotiating.
It makes you think about both sides and where both sides are coming from and what's the best outcome for both sides. The best outcome for both sides is not 50% and 145% tariffs.
What are you buying today? Three stocks.
Okay, I'll give you a couple ones. I really love Ryman Hospitality Properties. It's got a 4.5% yield, trades at about 13 times earnings. There's no tariff consequence. If a terrible recession were triggered, they're still fine. They own non-gaming conference centers.
All right, so again, dude, I think there's a world where this market could go higher. It's not going to be a straight line up, but it definitely does feel like if her argument is like, I just can't see us getting past the multiple on the S&P, I don't know if that's the best argument, especially if we're going to get some trade deals, hopefully by the end of summer to accelerate that. Let's get on one of our favorite analysts on the day and get some of his thoughts that are going on in the market. Kris, what's up?
You see how the data just keeps changing. It's like one report says, oh, employment is really strong. Another one saying employment is not as strong. So it's weird, man. And the question is, who do you trust, right? And so this is where I think the real alpha is. If you have the data and you can actually crowdsource the data, dude, you're way ahead of a lot of people. Like right now, if you did a chat, like let's say you sent it out on Twitter, because you have almost 200-something thousand followers now. You put in there, hey guys, how's the job picture looking? Is it strong, like moderate or weak? And you get it. Like that is invaluable data to have access to that kind of stuff. So
what do you make of this private payroll number?
Well, I mean, I believe this a little bit more than I believe the BLS data, only because BLS does things by survey. ADP does things based on Social Security, you know? So kind of like the data, and ADP is a private company. So I think they're probably better at figuring this out. But then again, it's also like the Fed with OER, with owner occupied, what is it called? Owner estimated rent or some shit. I forgot. Owner's equivalent rent to figure out what the housing market is. But it's like, dude, you've got lagging data. You've got multiple sites, aggregating sites that are actually giving you real-time information. But you rather rely on something like, hey, how do you feel about your house? What do you think it could rent for? Which is always going to be lagging.
Yeah.
So, I mean, whatever, it's our game that we can actually take advantage of real-time data and use those sources to figure out how to invest. So for me right now, dude, I'm seeing a lot of issues with housing. Okay, there's a lot of inventory coming to market. I'm seeing price cuts on top of price cuts, and houses are not going nearly as fast as they were. The credit market in terms of mortgage applications are way lower than what they are. We're at a point right now where people really need to pay attention to consumers when it comes to the housing part, because housing can have like a trickle down effect to the rest of the economy. Okay. People feel less wealthy when the price of the homes in the neighborhood are going down and people are selling a lot of homes. That's like number one. Number two is all the businesses that serve those houses. If people start cutting back on those services, those people don't have as many jobs, That's another major issue. And it just compounds from there constantly. Like there's so many people that work in housing or something adjacent to housing. So when housing takes a tumble, the economy takes, it's the reason why shelter is 30% of PCE. That's a significant amount. So new home prices have officially started to decline year over year for builders. Yeah.
So did you see the data yesterday? I think we talked about it a couple of days ago, but the exact number, I'll give it to you. The amount of supply compared to demand. Yeah, this one. There are 500,000 more sellers than buyers.
Yeah.
What is going on right here? Why is this happening?
All right. So this is my interpretation. Okay. So number one, there's a rebalancing of people that had moved certain locations during COVID, and those areas built up a lot. So a lot of techs, like if you look at the housing data itself, which states are primarily seeing a huge amount of inventory, the two main ones are Texas and Florida. You also have Tennessee a little bit because Tennessee also built a lot of stuff, but that's like hasn't shown up nearly as much yet. But if you look at like Arizona, Texas, Florida, the inventory levels there right now are in excess of what they were in 2019. Okay, that means there's more houses on the market now than there were even in 2019. And in 2019, interest rates were like 3-4%. So it wasn't like sub 3, but it was 4% for mortgages. So people could actually afford them. The prices on homes skyrocketed in Texas and Florida, right? So now you've got this huge wave of inventory that's coming on. So you're going to see reduction in prices from a lot of the areas that took on a lot of people during COVID. Now, what's coincidentally, the Northeast is actually seeing very strong demand in housing and not enough supply, because the Northeast didn't really build a lot of housing. They were under lockdown and they were like, we don't need to build more housing. Let's just let and you know, the Northeast typically is a little bit more like NIMBY-ish, you know, with how they do stuff. So there's not a lot of inventory in the Northeast. So the Northeast, you're actually still seeing bids. But if you just take Texas and Florida, dude, that is a huge amount of inventory that's there. And right now, and the other thing is you're starting to see California a little bit come, a lot of places in California starting to come in the market also. But it's not because a lot of people are just leaving California because it's goddamn so expensive to be there, you know. And also there's a huge tech scene in California. So if tech takes a dump, typically you'll see California also, you know, come down a little bit also.
So what is your next 4 or 5 months on how this all plays out? Because I know it's hard to do this because there's a lot of conflicting data, but Tom Lee says we're starting a new bull market. Like, how do you reconcile that with the data you're seeing as well?
Well, he's sort of right in that there's a lot of businesses that are being held back by the cost of interest, right? If your business is operating with like a 10% margin, right, and then 7% of that is going towards interest, so that means that now you're only operating with 3% margin. You know, these interest rates impact your business significantly, so your earnings are not that strong. On the other hand, if housing prices go down, if inflation comes down, the Fed cuts, let's say 100 basis points this year, 100 basis points next year, that's 200 basis points that get cut. Now you can borrow, instead of borrowing at 7-8%, you can borrow at 5%, which means now you've got margin expansion, right? So theoretically, you could enter into a bull market going forward, but it all depends on rate cuts. And that's why the Trump administration is saying, look, we've got enough data that shows that inflation is done. You need to start cutting, Jerome Powell. And I think Jerome Powell's like, no, I'm not going to cut. And basically now you're starting to see like things breaking down a little bit. And you're starting to see, I mean, it is serving the purpose that the Fed is trying to go for, which is hammer the consumer into not spending as much money, you know, right, which is going to get inflation down. The biggest fear, the two fears that each side has are very relevant. The Trump administration's fear is a recession that will get them destroyed in the midterms next year, right? Jerome Powell's biggest fear is being Arthur Burns, which is cutting interest rates too quickly, and then inflation rages back, and now he looks like like a terrible Fed chair.
Is that a legit fear in your opinion?
I mean, if it wasn't for the tariffs, I'd say he's completely irrational for keeping rates where they are. But with tariffs, you could see some increases in prices here and there, but not enough, in my opinion, to like cause a huge cascade in inflation, like 7-8%. I think a lot of the tariffs can be absorbed, but it all kind of depends on the administration too. Like the administration cannot justify 100% tariffs. Like if you do that, you're getting inflation. Don't even try to negotiate that. If you're doubling the price of imports and you're literally charging people that much, then you're definitely gonna cause inflation. But if you're doing, let's say, between 5 and 10%, it's not that much. Like a lot of it could be absorbed by the producers, by the sellers, and basically it'd be kind of a neutral event. And also it would actually help because now you're generating some of that revenue that's coming in to help offset some of the tax cuts and everything else. The challenge with the Trump administration right now is that they're being a little too generous with this bill when it comes to like you're
What
supposed.
do you think of Elon?
100% agree with Elon. 110% agree with Elon. Okay, like some of the stuff that's out there. Like, look, I come from I'm from New York, and I'm in one of the higher tax brackets, but I don't live in New York, and I live in Atlanta, but I'm still there. So one of the things that I can tell you is we do not need a SALT cap above 10,000. That only benefits people at the way higher end of the income curve. Okay. So if you're making like 100, 200,000, dude, I don't see anyone paying $10,000, $20,000 in taxes. The main beneficiaries of something like this is someone who's making like 500 to 700,000, I think. So a lot of the benefits will go to people who are already doing really well. You know?
Do you agree with the I was listening to a leftist critique of the bill yesterday, and they basically said this bill is because Trump has a lot of rich donors and he's giving them a massive tax break, and he wants to get it passed so that his rich friends get to make more money. Do you agree with that?
No, that's a liberal talking point. That's complete BS. Like, that's not it at all. I think the thing that the liberals are actually upset about, but they can't vocalize it because it's unpopular, is that the two things, which is getting people off of Medicaid that shouldn't be on Medicaid, and also getting people to not be as much as to be on SNAP. Those are like two main things. Like the liberals right now, they're like, oh, SNAP benefits, they should be for everyone. But then like, it's not like you're taking away SNAP benefits. All you're saying is there should be a work requirement with SNAP benefits. And it's not like you need a full-time job. It's like 80 hours a month. If you have an 80 hours a month and you're still low income, you still get SNAP benefits. So it's one of the things where the liberals kind of like they want too much. And on the other hand, the Trump administration, they're doing some dumb things too. In my opinion, the worst thing it is military spending. There's no reason during peacetime we should be spending $1 trillion on the military. No reason. Okay. Like, it just makes no sense. Not to mention, after this whole thing that just happened in Ukraine with their drones taking out those bombers, you should not be investing money in large capital things like that. Like, literally, you don't need to pay. Like, if you look at one F-35 is like $250 million. Okay. One F-35. And then on top of it, you've got all these support services and everything else that come on top of it. We shouldn't be spending crazy amounts of money in something like this. Invest more in technologies that are actually going to be able to fight the next war effectively.
Yeah.
You know.
Well, I think that's why. By the way, Hims right here down about 2%. I think that's why Elon was pissed, because he's like, dude, you guys are not cutting defense. You're not cutting welfare. You're not cutting anything. And do you think he's kind of at the point where he's like, why did I even support Trump if it was all going to blow up in my face and I was not going to get any chance for Doge to become real? Yeah.
I mean, here's the thing. I know a lot of people, some of the people in the chat saying, oh, we don't need to, we need to modernize the military. But trust me when I say this, there is a lot of waste when it comes to contracting within the military space. Okay. Alex Karp, Palmer Luckey have mentioned this 150 times, man. The defense contractors literally charge crazy amounts of things. And these are all things that don't add to economic productivity at all. The challenge that you have here is if you sacrifice economic security for national security, eventually the national security part will bankrupt you. And if you end up like, if your country goes banana republic and bankrupt, what's the point? Oh, we have the best planes in the world. Yeah, but we can't even fly them because we got no money to finance them. That's the logic. And I'm not saying, hey, don't spend $700 billion on the military. You know, like, go for it. Spend $700 billion, just maybe $300 billion. You know, go back to levels like 2019 levels of spending. I mean, if you're going to tell people, hey, we're not going to pay for food stamps, you can't be like, yeah, but we need to buy all these additional, you know, these planes that are never, you know, I mean, we just have to be strategic about how we spend things when we can spend it. Right now is not the time. Like, it's peacetime, Right now is not the time to spend excess amounts of money on the military. Yes, I get it. There's modernization programs, but trust me, if you look at how the military is structured, we have a lot of major projects that are complete boondoggles that go nowhere. And all of that money just gets wasted. All right.
Yeah.
So
look, it's a fair point. Kris, I want to get your reaction to what Basent said yesterday as well about the big, beautiful bill.
This tax bill is not a tax cut for the most part. It is making permanent the 2017 Tax Cuts and Job Act.
Yeah.
So what we are doing is, it is current tax policy. We are going to make that permanent. Then for working Americans, we are going to put in the president's agenda of no tax on tips, no tax on Social Security, no tax on overtime, and making auto loans deductible again. On the other side, we've got tariff income coming in, which I also believe Senator Paul does not like, and that could be substantial.
Yeah.
That over the CBO scoring window of 10 years could be between $2 and $2.5 trillion.
Yeah.
Do you agree that the level of growth that we will be able to achieve, which is the sort of scoring system that Basent is talking about, isn't taking into effect, or isn't accurately being represented compared to the deficit amount that they can easily see that will entail?
Well, one is an unknown number. I mean, this is what the Trump administration is saying. Like, we can grow ourselves out of it. So we should just spend, like, the CBO is only projecting this much growth and we can grow more than that. Like, what are you going to take a chance on that? You know, like, that's how you're going to do things. You're going to base it based on chance. Like, no, you need to do things based on reason. And I think that's what Elon is doing correctly, which is being reasonable about, hey, when no one is saying we need to stop spending and basically go crazy with cutting, but whatever we do today will end up preventing us from having to go into like austerity in the future.
Yeah.
Okay. You do not want to be put into a position where you're going to be in austerity. You know, so right now, I think Elon is correct. If the government right now starts to say, hey, look, we're going to control our fiscal house, bond yields come down, we pay less on the interest that we currently have. We have 36 trillion in debt. Okay. 36 trillion. What does that mean? That means that every 200 basis points of reduction in treasury charges means you're going to get between 500 to 700 billion dollars of interest savings. Currently, next year, we're projected to spend $1.2 trillion on just interest.
Right.
Like, it's not a sustainable path right now, dude. So Elon is absolutely correct where, and believe it or not, I actually am okay with, raising taxes. And I wouldn't mind my taxes going up. I don't know. I've done well. I don't mind paying back this country.
Well, I think it's either rich people pay a little bit more, or we go bankrupt if we can grow, right? So it's like everyone's gonna like, and you want to see this country survive. So
yeah, it's the same thing with Elon and David Friedberg. David Friedberg's a billionaire, yet he's like, we need to get our house under control and maybe even raise taxes. Why is he saying that? Because he's like, look, I'm only a billionaire and I get to enjoy my money because this country is in good fiscal order. Right? Yeah. Every rich person here needs to realize, if our country goes bankrupt, you're not rich. Okay. Ask anyone in Venezuela how rich they are, because at one point their currency got devalued and whatever they had went to zero. So what's the point? What's the point of being the richest person in a poor country?
Look, it's fair. And I don't love what the government does with our money all the time either, but at some point, dude, if we're not going to grow out of this, then we're going to get the money from somewhere. And if we're just going to issue more debt to get the money, that's not going to be the best situation.
And it's a liability. I mean, dude, debt is how empires die. Okay. They take on a lot of debt. And then what ends up happening is they can't pay the debt. They end up in a position where, sorry, give me 1 second. Sorry. They end up in a position where they go into a debt spiral. Their currency gets devalued. And once their currency gets devalued enough, basically everyone just keeps fighting each other for resources. So I don't know, man. I look at this situation that we still are in a position where we can control ourselves, get to a level where we can actually like take a step back off the ledge. You know, it's going to be a hard decision politically, but I don't know. I don't know how it works out.
Talk to me about VG up another 7%. What are your thoughts here? And is this a buy at these levels, or you'd wait for a pullback?
I mean, it depends on your outlook. Like my outlook for holding VG is like 10 plus years, because this thing, in my opinion, is going to be a cash flow monster after more than a few years, right? So right now it's still undervalued relative to its peer, which is Cheniere, right? So there's still value there, but it's not, oh my God, like this is the cheapest thing in the market anymore. So if you look at Venture Global's current market cap is around 30 billion. Cheniere's is about 58 billion. So in my opinion, this should get to Cheniere's level by the end of 2026, right? But Cheniere is also buying back shares and everything else. So this thing should be at least between 50 and 60 billion dollars. So if you think about it, that's your upside for now. My thing is, I look at the market cap, but I also see like, what are they going to do with all that free cash flow in the future? How are they going to do? How are they going to return that to shareholders? Are they going to do it through dividends? Are they going to do it through buybacks? And the thing is, their business model, if it's similar to what Cheniere is doing, which is a combination of buybacks, dividends, and everything else, as a investor, you're going to do really, really well just holding it and not looking at it for the next like 15, 20 years. You know, this is one of those businesses that basically you buy it, you hold it, the business makes money, reinvests some of that money in itself, releases some of it to investors, and the stock price just goes like this. You know?
Right. Yeah, well, people loaded up at $7, and so it is doing very well. 15.25 on VG. Any thoughts, Kris, on? I mean, I asked you this a couple days ago, but Goog's still kind of in the gutter. Are you? What are you doing with your position? Are you just holding and waiting?
I'm just holding it. I think that they have so many levers that they can pull. I mean, it is scary because like one of the comments that someone made in your comments was they're seeing like 70% less traffic, you know? So it's kind of interesting. Like, hey, if that ends up proving out to be true, that kind of re-rates what I think would be a fair value. But once again, that's hard data. As far as I can see, I haven't seen that necessarily play out just yet. So, you know, I'm continuing to hold.
We got Nebius up here, 5.2% on the day. Microsoft right here, 464. Microsoft getting back to continuing one of the best months it's had since 2023. Grab right here, 507. That's up about 1.6%. AMD, 117.62, and then Apple, 204. That's up 0.6% on the day.
Here's just a little interesting thing, because I'm on your morning stream, and I just want to give something to everyone. One of the things I didn't realize with Waymo is that at 5 p.m. every day on Waymo, what they essentially do is they download everything that all the cars have ever learned into Waymo. Okay, into every car. So every car is connected. It learns things. It takes that information, sends it over to Google. Google, takes that data, sends it back to all the Waymo cars. Now you're thinking like, hey, that means you're bullish on big data. I'm like, no. You know what I'm bullish on because of that? ASTS. If you want a future connected car, you're going to need some level of connectivity to all the cars, irrespective of their location, like all across the world. Okay. And these guys are going to be able to provide that service, not just to Google, but to all the other OEMs that are out there, where you're going to have satellites that are connected to the cars that basically allow for data to be sent over, and irrespective of if they're in a strong 5G location or not. So there's a lot of businesses that are going to be able to kind of benefit from ASTS connectivity. And one of the things is I think Google recognized this, and that's why Google took a big stake in them.
So you think the stake was due to the potential Waymo training over-the-air updates type of business they would have?
Oh yeah, not just that one, but I think Google saw like, hey, wait a second, like connectivity is going to be a big driver in the future of everything. Like every piece of technology is going to have some level of connectivity. What is the easiest way that you can download firmware, download updates, do all the things? Well, it's over the air, right? And the thing is, there's a huge swath of this country that still, from a connectivity standpoint, is still not as connected. You know, so I think they've got something going, man. So I think in the future, if they're able to, you know, partner with a lot of things, they're gonna do well. Tesla already does this without ASTS. You are absolutely correct, but Tesla provides it to one person. Tesla, okay. You want something that goes all across the spectrum, and not everyone wants to work just with Tesla. With SpaceX.
I will say though, Chris, those Cybercabs, I looked at them yesterday. They look gorgeous, bro.
Are they?
Dude, the Waymo is ugly. It's
which Waymo are you talking about? The Jaguar I-Pace?
The Jaguar. It's a clunky Jaguar. The Tesla one looked beautiful. And I haven't asked you about this. How are you reconciling that there's 2,000 Waymos, and then when Tesla unveils FSD, there's going to be like 500,000 Teslas? Like, how is that not? Like, so when they flip on the switch and unsupervised becomes real, Elon says by the end of 2026, we'll see if that plays out. There are literally 7 million Teslas in America. At least 100,000 of them, you could argue, even 50,000 would be on the roads in that network. Waymo has 2,000 cars.
Okay, so a couple of things. Number one, just because Tesla has the cars doesn't mean that they get to be deployed right away everywhere. Okay, Waymo, one of the biggest moats that Waymo has right now is that its technology has been proven out in multiple cities. And so right now, as they go to the next city, they're taking a very structured approach to how they are approaching the regulatory bodies in those specific regions that they are. So trust me, Waymo, if they really wanted to, they could send out 10,000 cars and be like, there you go.
They don't have 10,000 cars. That's not true. How is
no. They
can grand to make a car.
Listen. If they wanted to, I said they would do it. Okay. But they understand the value of doing it slowly, methodically, and getting people's trust. Okay. And once you win people's trust, that is a moat in itself. Okay. And it's not just the trust of the people, but also from regulators and everything else. So right now, I mean, that's why you saw the Bloomberg hit piece on Tesla, you know, saying it had a fatal crash. So I say, I know a lot of Tesla people in this chat are going to be like,
no, but it's not even. I'm not even like a super big Tesla bull, but I found out 2 weeks ago Waymo has 2,000 cars. I'm just thinking, in the best case scenario, Elon flips a switch. There's hundreds of thousands of them. Let's say all the regulations are the same because Trump, you know, got.
I don't think it's as simple as you think, brother. I don't think you could just say, okay, you know, 100,000 cars could turn into robo taxis in a flip of a switch. I don't think that's
if Waymo is able to operate in Atlanta and Austin and Miami, those same laws theoretically in a year or two should allow Tesla, even if it's not LiDAR.
No, but you still need the regulatory authorities to approve it. Okay, regulatory authorities have to say, like, yeah, we trust Tesla's FSD to do it, and it takes time. It's not as easy. I'm telling you, it's not as easy as you think.
Okay, but when it eventually does happen, Waymo's still not going to have hundreds of thousands of cars that can be flipped on by a switch, right?
Bro, you don't need hundreds of thousands of cars. What are these cars going to do? Sit around in parking lots all day? No, you make as many cars available to the point where there's actual demand. Right now, that's what they're doing. Like in San Francisco, if you want a Waymo, they're like 4 or 5 minutes. It's not like taking you 2 hours to get a Waymo. Not to mention the Waymos are not going to be operating like all the time. So you develop things based on capacity. So this argument around, oh, well, Tesla could just flip a switch and get 100,000 cars out there. Like what? You don't need support staff to deal with, deal with people that are, what is that they call, in the back seat trying to deal with, all sorts of issues. So there's definitely going to be some infrastructure investment that Tesla's going to have to make to get a ride hailing service together that I think Waymo has already implemented. I think Waymo's ahead right now. Now, there's also the reality that you have to face that there's going to be multiple operators. Okay, you don't it's not a take all some. Yeah, it's not a take all game. It's some game, man.
It's not, but if it's a 70-30 market share split, if it's Uber versus Lyft, which Uber has the majority of the market. I mean, Uber's market cap is a lot different than Lyft's market cap.
I think you're a little bit too early in trying to determine who's actually going to quote unquote win the autonomous car race.
I agree. Definitely early. It's definitely early.
And you got other large players out there as well, like Amazon with Zoox. Okay, they're testing their stuff too in Vegas, I think, and in Miami. Yeah, so you'll eventually see the cream rise to the top.
Yeah. All right, let's react to this news. We got some updates on Trump and China right here.
Is very tough and extremely hard to make a deal with. So with the president sort of venting and lamenting on social media, it does feel like negotiations are in something of a cul-de-sac this week. The White House has suggested that Trump and Xi Jinping would have a call this week. So far, at least, no indication that that call is on the schedule. And on Tuesday, U.S. Ambassador David Perdue met with Chinese Foreign Minister Wang Yi in Beijing, after which the Chinese side released a statement saying the United States should get bilateral relations back on the right track. The Chinese statement also called U.S. action since the Geneva talks earlier this year, quote, regrettable. And in a statement on social media, Ambassador Perdue said in that meeting, he emphasized President Trump's priorities on trade, fentanyl, and illegal immigration. And guys, the White House says, we shouldn't make too much of the fact that the president was on social media in the 2 a.m. hour this morning. They say he's usually up late working and up early working, and that's just par for the course here. Back over to you guys.
Yeah, like the rest of us on social media at 2 a.m. sometimes.
I try to avoid
Unfortunately.
it at 2 a.m. It can be dangerous.
So what do we know about what's next in U.S.-China? Did the Geneva talks set in place some sort of schedule or timeline of events?
Well, we don't know what's next. I mean, the president has imposed his timeline. He's looking to get this call with Xi Jinping. That may get scheduled. We'll see. Today is only Wednesday, so there is time for them to do that. The question is, who has the incentive to come to the table here? Do the Chinese look at President Trump's social media posts and say, you know what, this president wants a deal more than we do. Let's let him dangle. Or do the Chinese look at the absence of access to U.S. markets as, fatal and internally destabilizing, which is important for them in Beijing?
Kris, what do you think? You think the Chinese let him keep tweeting, or you think they come to the table? You're muted.
I was watching the comment section. Someone wrote, it's actually pretty, I want to learn the art of turban wrapping. It's right because we're both Indian, It's not that easy, believe it or not. There's actually, like, if you ever go to like an Indian wedding, you hire a professional turban wrapper.
Last time I had a turban on was when I was younger. I was like 5 years old at a wedding.
Yeah.
But I wore one in India. I just like got a prop from the street vendor.
Yeah.
I haven't had a proper one though.
I have my wedding turban. If you want to see it, I'll go get it.
No, go get it.
Hold on, I'll be right back.
Let's see it. This is good, dude. I want to see this. But yeah, Trump did tweet at 2 a.m. last night about Xi Jinping. He was really on Truth Social thinking about China. And by the way, do you guys know Xi Jinping's daughter is the same age as Barron Trump? And there's been a lot of rumors going around that they're dating. Now, that's probably not true. They're probably not dating. But could you imagine, bro, and I think she goes to Harvard. He goes to NYU. It does say something, though, that the president of the Chinese president's daughter, or the daughter of the Chinese president, doesn't want to go to the Harvard of China. She wants to go to America. It kind of says something about, where she wants to live her life. But could you imagine if they were dating, bro? Could you imagine if freaking Xi Jinping's daughter and Barron Trump were dating? It'd be insane. That'd be wild. That's probably never gonna happen, but it would be wild. Tacos at 2 a.m. Yes, exactly. Tacos at 2 a.m. Let's get a little bit more coverage on that, and then we'll wait till Kris gets back here.
They don't like anything historically that could cause any kind of internal disruption or destabilization of political and economic control. So the question is, who has the higher tolerance for pain right now? And politically, you might think, well, that's the Chinese side because their system doesn't operate with as much political feedback as the U.S. side does. But we'll see how it shakes out.
Eamon, appreciate that. Eamon Javers watching the White House side today. Yeah. Meantime, we are watching Congress. Speaker Johnson speaking and this new CBO score. Let's get to Emily Wilkins with a news alert. Hey, Emily.
Hey, Carl. Speaker Mike Johnson just addressed reporters, and he said that he had spoken with Elon Musk earlier this week, felt like they were on the same page about that Trump mega bill, and that he was surprised to see Musk's tweets yesterday. He said that Musk did a 180. Listen to what he said about that interaction.
I talk to President Trump, all the time, multiple times a day. Obviously, we've talked about this. He's, as you know, he's not delighted that Elon did a 180 on that.
That wasn't my sound, by the way. That was from her.
And so Speaker Johnson did say that he called Elon Musk last night. He wasn't able to get a hold of him, but does hope that he will be able to speak with Musk a bit today. Obviously, he has a very fragile majority, very narrow majority that he has to keep in line here in order to get this bill over the finish line. Potentially complicating that, of course, is the official cost that this bill is going to add to the debt. The House bill that was passed a few weeks ago, we have the official score from the Congressional Budget Office, $2.4 trillion. That was actually a little less than we've seen a number of estimates come out on, but it is still adding to the debt. Speaker Johnson, of course, and other GOP leaders say this doesn't fully take into effect the benefit that tax cuts could have on the economy, and we are expecting additional data and scoring on that. But
all right, Kris.
I couldn't find it, dude. It's sad. My wife packed it away somewhere. Couldn't find it. Sorry, guys. I do have something else though. So Sam thought it'd be hilarious to give me this. I told him I'd wear it once Palantir actually got to like $30 and below. It's still fresh. It's brand new. I still haven't got a chance to wear it yet because Palantir has never got back to that freaking $30 level again.
Bro, just put it on, bro. Like, by the way, speaking of Palantir, I'm curious about your thoughts on this as well, but they just tweeted, if you want to meet Dr. Karp in 90 seconds, identify the technical errors in this article, DM us a video in the next 24 hours. Whoever finds the most inaccuracies gets an interview with him.
Just do ChatGPT, bro. Get it on there and be like, find me all the inaccuracies.
But this is Palantir. Basically, I'm happy they're doing this. They're taking control of the narrative. They're like, we are so confident that everything that's being reported is bullshit that, we're willing to literally let you speak to Karp if you can explain to us how much of, nonsense the New York Times is reporting.
I think a lot of these publications have a very liberal tinge to them. And so, I mean, even if you saw that, and I'm glad you brought up that thing with Tesla. Why would you bring up an article from like an incident from 2 years ago and be like, oh, new concerns? Like 2 years ago, those are not new concerns. It's like the dumbest thing. So this is one of the reasons why it's like a lot of the media, bro, you can't trust one source anymore. You have to make sure that you're looking for information from multiple sources. So much bias.
Yeah. By the way, you guys saying that Xi Jinping's daughter is 32? That's true. So she's probably not going to be dating Barron Trump, but she is back at Harvard, and so she is in the United States. People are saying Amit is biased. So I think I've accurately disclosed I am obviously biased. I have excitements about Palantir, but that doesn't mean that the article
can't be objective.
Yeah, like, dude, if the article, I read the article, I went through, I listened to all the hit pieces. I'm trying to see what is their claim, what is their argument, what are they trying to say about Palantir, and it's absolute like, how do I find a way to paint this narrative about a scary company? And I'm like, well, that's just there's nothing there from a technical perspective or a fundamental perspective that's real. There's just not.
See, one of the things that you'll see is they'll be like, Palantir software used to kill people. Yes, that is what a military contractor does. Like, what do you expect? And Karp says it. The reason why we kill people is because they don't kill us. And I'm okay with that. Like, I want Al Qaeda to die. Is there a problem with that? Like, can someone give me a disagreement about that? Like, why shouldn't we kill terrorists?
Dude, there's a lot of things to critique around Israel and their government and their military, and those are open critiques. And you can critique Palantir for supporting all that stuff. I think all of that's fair game. You should critique that stuff. But then when you hear queers for Palestine,
the hypocrisy is just insane, dude.
It's just not real, bro. If you were queer in Palestine, you don't get to be queer in Palestine. And I think my generation, and in particular people in their 20s, don't realize how many freedoms we have in the States.
It's insane, dude. I think like being someone who was in the military, I could tell you, like things like Palantir actually prevent collateral damage so that you don't do things like carpet bombing. You know, like in the past, you didn't know who was who, so you know what you did? You just drop bombs everywhere. With Palantir, you identify targets, you take them out specifically, you know, which saves all the lives of the area. You think that in a military operation, the goal is, hey, don't kill civilians? No, the goal is minimize the death of civilians. So if you have a software tool that minimizes that to the utmost 0 level, bro, by all means, it's not a software that kills people. That's a software that actually saves people. Because what's the alternative? Drop a Jada 2,000-pound Jada M on a village, take out everything in the village. That's your other option.
Yeah.
You know.
So people want black and white answers, and it's just not that easy. You know.
Yeah, and that's the one thing that I really am. One of the reasons why I'm bullish for companies like Anduril is that they understand defense and what the modern defense needs are actually going to look like, rather than, hey, let's just build a bunch of giant wasteful capital projects that are not going to, you know, end up getting real tangible value to the warfighter.
Yeah.
You know, so it is what it is. But that's the other thing too with ASTS. I think they're going to get big military contracts, really big ones.
Or how much money do you have in ASTS?
Not that much. I only have like 20, 30,000. But I am thinking about building a bigger position, you know.
So you have more.
Yeah.
You have way more in VG than ASTS.
Oh yeah, hell yeah. Hell yeah. Yeah. I'll tell you right now, I have like 30,000 in ASTS. So it's not like, because the thing is, it's not a play that I'm the one that did like the fundamental grounds up research. So I'm borrowing a lot of conviction from some of the space mob community.
I've never heard that term before. Borrowing conviction. Yeah. I'm gonna use that. I'm definitely.
You've never heard that?
I've never. That's a great term. I am borrowing conviction on hymns from the chat.
Yeah.
Borrowing conviction. Yeah.
Well, that's the thing. If you, and that's what investors do. Like that's what a lot of the people in the chat do when it comes to us. Like when we discuss things, they're borrowing our conviction, basically.
Yeah.
You know, because they're like, oh, I think these guys are very well researched. They're interested in this product. They're interested in this company. They've done a lot of homework. So, you know, it's not like they don't do their own homework. It's just that they don't mind looking over our shoulders and being like, yeah, you know, I kind of trust this guy a little bit. I think he's smart. You know?
They borrowed your VG conviction. That's for sure. The amount of questions I get on VG every day, and I'm like, guys, it's just natural gas. Like, what? But people are so excited about it because of you and Matt.
Yeah.
I definitely borrowed Rocket Lab conviction from Matt. I definitely did that.
Yeah, I mean, that's the thing. No one has the time to research everything 100% by themselves. Like some people, like, dude, I've missed on a bunch of stuff that Sam has brought up, and Sam's made really good money. I didn't borrow his conviction on it, right? But then, like I said, we borrow each other's things too. Like he was telling me about this company Rubrik for a long time. He was like, "Oh, you know, take a look. He did all this DD, he put it on his Substack and all this other stuff." And the thing is, I just didn't get the chance to do it myself, and you know, I never got into it. But it did really, really well. Look at this since I IPO'd.
70 to 100 in a month. Holy crap!
Yeah, look at it from when I IPO'd. It didn't IPO that long ago.
IPO'd, wow, April 24 at $20.
Right. And the thing is, he is a guy who works in software, which gives him that, and this is something I'm going to borrow from I think CodeStrap actually said this. It's called tribal knowledge. Do you know what that is? You ever heard of that term? You've heard of that term, right? Tribal knowledge.
I've heard of it in the context of like how Palantir talks about tribal knowledge of the enterprise and they bring it together in the ontology, stuff like that.
Well, what tribal knowledge is that if you work in a certain industry, you gain this set of knowledge skills that aren't necessarily taught to the world. Okay. And so what happens is you have that tribal knowledge. So if you work with someone, as Palantir does by sending, you know, FDEs into an organization, they work with the people who have that tribal knowledge and then are able to kind of tailor the software products and everything to that tribal knowledge. Like me, I used to be a radiology tech. So I have tribal knowledge in some of the aspects of being a radiology tech. Like what are some of the pitfalls of being a radiology tech? What are some of the things that are actually needed? Same thing with like nurses. Like if you look at Ask Zoe right now, there are tons of things, Zoe, you probably learned on the job that was never taught to you while you were in school. And I'm sure everyone in the chat, you guys know exactly what I'm talking about. You go to school, you learn something, and then you go to work, and they're just like, hey, listen, none of that shit applies. This is how we actually do it. And that's tribal knowledge, you know.
Yeah, I mean, I was talking to a couple of Palantir employees yesterday, and they said whatever career path they had through college, like none of it mattered at Palantir. They had to, just jump in and learn, and then based on what they learned, actually take action to build a career.
Yeah, what's the definition of tribal knowledge? Right here. So let's see.
By the way, Celsius is almost 40.
It's almost 40. Nice.
Celsius almost 40, 39.90.
Yeah, there you go. Tribal knowledge is business context. Refers to undocumented informal knowledge that is known by a specific group of employees but not widely shared within the organization. It's essentially the collective experience and insights of individuals within a particular tribe or group, often passed down through informal channels like mentorship, on-the-job training, or word of mouth. Yeah, that's exactly right.
I feel like this entire retail investing phenomena the past 5 years has been tribal knowledge. All of us coming together, sharing stuff. You have your expertise, I have my expertise, and we bring it together. It's
well, it does
for retail.
Well, it does give us one level of additional insight that maybe other people may or may not have. Right. So as an example, like if I work in healthcare, like I know, like, okay, this is some of the things that you look out for. Right. And that information is very hard for analysts that are just purely looking on like financials to figure that out. And so they kind of miss on that. And so a lot of hedge funds, what they do is they'll rely on information from analysts to figure out like, okay, what should I pay for this company? But they don't understand if the product is actually a good product or not. Like I can tell you Rubrik, because Sam works in that industry, he knows what it is. It works. And that's what it is. Like for me, and this is why I kick myself every day. I never invested in CrowdStrike and I never invested in service. Well, I invested in CrowdStrike as a trade play when they had that crash last year, but I never invested in ServiceNow, even though I've been using the product since 2016 and how I think it's great. It's a great system. Same thing with CrowdStrike. I've had CrowdStrike Falcon on all of my endpoints. I just never thought, hey, maybe I should buy some CrowdStrike for some reason. But that was an alpha that I had way back in 2016. But sometimes you miss, like literally some of these opportunities are like staring you in the face and you miss them.
Dude, I had the tribal knowledge with Grindr and I just didn't, I didn't go heavier. I should have though. Could you imagine if I bought 5,000 shares at $12 and still held it? Like, it would have been the coolest thing ever. It really would have.
Like, you don't have any more Grindr? You sold it?
I think I had like 200, 300 shares. I think I had 1,500 at the peak.
Yeah.
Now it's down to like 200-300. But
interesting.
The point is, at 12, I recognized the tribal knowledge of the gays. They were going to use Grindr. And I figured I was the only person on planet Earth that figured out this stock was going to benefit. I could have legitimately said that. It would have been another contrarian pick for me. I could have really rode it up to a double, but I didn't have the amount of conviction.
Imagine a dude gets caught like by his significant other. They'd have like Grindr on their app or on their phone or something. It's like, no. I was just doing stock research. Babe, I'm just.
Dude, that would be pretty awkward. That would be pretty awkward.
Like, no, I wasn't. Like, oh, Jesus. You better be careful, bro. Your mom figures out that you're on Grindr all the time. It's like, what? Now you could say, hey, listen, mom, I'm just investing in the company, bro.
Dude, she was trying to sell Hood yesterday. I was like, yo, chill out, Brody. Like, chill out. Like, we don't need to sell. Her average is 35. She's not going to get that again.
I think I saw like this one TikTok clip where someone said, babe, I'm not on Grindr because I'm gay. I'm on it because I thought it was a social networking app, and I was just trying to meet up my peers.
Oh, hold on. Let me share this video. So I saved this video yesterday. It's a brown guy doing a stand-up routine around stocks. Maybe people will think it's funny. I thought it was on a scale of, all right, everyone has to put in chat. On a scale of 1 to 10, I thought it was a 6 in terms of funny. There were some good moments, some boring moments, but it's a 1 minute 30-second clip. Let's watch it.
I invest in the stock market, right? I'm a long-term investor in the stock market. That's what you say when you lose money in the short term, right? Everything I've touched has become red, guys. My stock market portfolio is communist, full red and giving money away. It's really bad. One stock I bought got delisted. The stock went out of stock. I tried crypto. I did crypto. Wow. A crypto did me, actually. That's the more accurate. No, I mean, it's not crypto's fault. It's my fault. I didn't understand crypto. Okay, I tried. I couldn't. I'm dumb, right? Like when I was a kid, we used to have lace packets. Inside that, we'll get Pokemon Tazos. We used to trade that. I understood that economy. I was the Manmohan Singh of my colony over there. I was like, oh yeah, 1 Pikachu, 10 Jigglypuff, let's go, right? But here, this one I couldn't. I tried. I went on Reddit. There's this page called Explain Like I'm 5, right? Which breaks down complex concepts and explains it in a language that a 5-year-old can understand, right? And I read it. And now I'm proud to say that I understand crypto like a 5-year-old. Crypto price go up, sell. Crypto price go down, sad sell. That's why I saw crypto go down, I saw crypto go up, and I bought. Right here, I bought it on the top. That's why I run into people, they're like, oh, I sold crypto at 300% profit. I'm like, bastard, I bought from you. I made nothing. I sold it at high blood pressure.
We need more stand-up routines about the market because I feel like there's an untapped opportunity for comedians to talk about the stock market.
Yeah, I mean, incorporating the stock market into the routine, man, that's actually pretty good. That's a pretty good idea. There's like one from, do you know Nimesh Patel? He's done a couple of quick things about that. Here,
I know him, but has he done a stock market one? Okay, let's see.
A couple.
Your name, sir?
Kyle.
Kyle, how you guys know each other?
Work.
Work? What do you do?
We run an online casino.
You're DraftKings? You run an online casino? Which one? Can you say which one?
DraftKings.
You run DraftKings? You are the DraftKings guy? You're the CEO of DraftKings? VP of gaming at DraftKings? Lock the door! All right, what's the code I gotta put in to get free money? Come on, man, I lost a lot of money to you motherfuckers. This $30 ticket ain't covering shit. Who's your celebrity endorsement person? You guys, Kev, right? Look, I'll do that shit for like a quarter of the amount. I could get so many Indian people addicted to gambling. We already got a lot of gambling. Gambling is a huge Indian vice. I don't know if you've ever been to a casino in Atlantic City, but oh my God, you've never seen so many sad people gambling away their liquor store earnings. But I'll do that for you. And what's your
Dude, you did that to your mom, bro. You did that to your mom. Now your mom and your sister are just like degenning on options, man. Horrible. You literally gave an Indian woman the seeds to her own destruction. You better teach her to buy some bonds, bro. That's what you need to do.
Dude, no, now she's up to when she buying Robin at 30 and seeing it to 70. The bad part about this is she's gonna expect every stock to do the same thing, which is not, So that's what I'm trying to get. Like, dude, you have a winner. Don't sell the winner. Like, I don't know if you're gonna get $30 again. Just hold the winner. Go into retirement with the winner. Robin, it might be $100 by then.
I know my dad's a degenerate gambler, so like I know he's been trying. Like he does all sorts of different investing things. I mean, he's just like that. Like if you're a Patel, bro,
is he still degenerate?
Oh hell yeah, dude. He'll still call me up and be like, "Man, you should have held that Palantir." But what I do is like, he's lost so much money in the market. I'm like, look, Dad, Mom. Well, not my mom, my dad. Listen, I'm not going to give you any more money directly because if I give you any money, you're just going to put in the stock market and you're going to lose. And, it's funny because I'll ask him, like, why should I, like, he'll tell me, like, give me investing advice. And he'll be like, you should buy this stock. And I was like, why, Dad? He's like, because I've been watching it. Okay. And all I see it just keeps going up and to the right. What's wrong with you? Why wouldn't you buy a company like that? And I'm like, Dad, that's not how the market works. He's like, yes, it does. What are you talking about? I've lost so much money. He's like, I've lost so much money. Like, I know what I'm talking about. I'm like, what? And then what's funny is like, sometimes he'll call me and he'll be like, listen, don't sell, okay? You have a habit of selling too quickly. And I'm like, it's the guy who lost like $100,000, like giving me advice on how to like buy and sell. And I'll be like, yeah, Dad, you're right. Like till this day, he'll still be like, man, if you only held that Palantir. I'm like, it's like, do you know what I've done since I've sold it? Like I bought other things and I've done really well, Dad. He's like,
Wait,
yeah.
How did it work out when you told him? Like, how did you disclose that you sold Palantir?
I never told him. He just watched Palantir Weekly.
Oh,
He watched Palantir Weekly. You know, he'll tell me like, man, you sold SLG too early. And I'm like, it's like this guy over here trying to give me advice. I'm like, you know, but huh? Oh, he's definitely a troll.
See, it's I think it's really good for older people to be into the markets, especially at least my parents. They've got in like the past couple of years because it keeps them knowledgeable about what's going on in the world because you have to be because you have investments. B, it's exciting, you know. And as you get older, you're looking for different hobbies and things to do, and it obviously needs to be safe and all that stuff as well. But like getting into a hood at 30 and seeing it go to 70, like that's really cool for someone to see as one of their first main stocks. And now we got to find the next one.
Yeah, man. I mean, for my mom, I just have her set up on fixed income. So what I do is I just put a whole bunch of money into some fixed income stuff. So any money comes in, I just give it to her. I'm like, here you go, Mom. You know, and she's like, oh my God, my son's the greatest son ever. And he's, you know, and that's the thing. I did that for my my father-in-law too. Like my father-in-law, once he sold his liquor store and stuff. So I basically just set him up in a way that he's getting regular income.
Yeah.
You know, because when you get older, the last thing you want to have them deal with is a ton of volatility. What they're looking for is basically enough excess income so that they don't ever have to ask you for money directly.
Because there's always an ego thing as well and pride.
Yeah.
And your kids for money.
Yeah.
That's fair.
Yeah. So teach your mom about TLT and just getting in some safe stuff before she sees like a 40% drawdown in the market and is like, you know, dealing with that. So
I agree, but her portfolio is just not big enough to like just only be in safe stuff. Like she's still looking for some. But no, I agree. I mean, that is the goal because at the end of the day, if she could have a portfolio where 70% of it is dividend safe, 3-4%, that's all you need. And the other 30%, she gets to play with the Palantirs and the Robinhoods, the Nvidias. I think that'd be ideal.
Yeah, my father-in-law loves it. Like literally every 3 months, he just gets a huge dividend drop off. He's like, oh, nice. I can go and do stuff with it, you know? So
no, literally, she wanted to sell 100 shares of Hood yesterday to pay off her Chase card. And I was like, no, I will send you $7,000. You don't sell your $30 Robinhood shares, which you're probably not going to get again unless we have another tariff meltdown.
Just make sure you don't teach her about margin, bro. Because it's these Indians, bro. You teach them about margin, they go degen on that, then you got a real problem. You know?
Oh, when most people introduce to margin, they think it's free money, and that's just not the case.
Yeah. It's like, hey, Mom, do you know what margin is? No? Okay, good. Yeah.
Oh, real quick, let's go to this update from NVIDIA, then we'll end it out. This is about retail selling with NVIDIA.
Rally just over the last month. Retail traders have been dumping shares of NVIDIA. Vanda Research shows traders sold more than they bought over the last week that you can see on your left-hand side, as well as on the last 21 trading days. There's also a NASDAQ sentiment chart, which also confirms this same pattern, which is pretty much net selling for the latest 10-day average. You can see just really on the right side of your screen, it's the sharpest drop in just the last 3 years. And only just yesterday, when NVIDIA became the most valuable company in the world, did retail swing back to buying NVIDIA, although only a mere $35 million for the day, according to Vanda Research. So the split is really just stark. Retail investors who rode the 2022-2023 hyper growth wave are now bailing on the stock. Dan Ives from Wedbush told me that retail is just more worried about China drama and the export restrictions, while analyst Ben Baharin notes traders are frustrated by fading spike returns as NVIDIA's business matures. They, were looking for that quick buck and now not getting getting those gains. Meanwhile, institutional investors who reduced tech exposure during April's sell-off, you can see the dip on your screen there, are now forced to buy back in as the rally continues, taking the opposite side of retail investors over the last little while. Mizuho's Jordan Klein calls NVIDIA's second half, though, the setup's fantastic, and that's why investors on the institutional side are getting in. The divergence, though, signals a market evolution as NVIDIA transitions from hyper growth to steady growth, with much AI upside already somewhat priced in. Some can debate that. Institutional capital increasingly drives today's price discovery. Retail selling streak may now serve as more of a contrarian indicator for institutional buying opportunities rather than the bearish signals that we're so used to seeing for stock performance. Sarah? Okay, Kris.
Look, it makes sense. I think retail bought a ton of NVIDIA at the lows. They're probably holding right now, taking some profits, not a bad thing. But I do think NVIDIA's growth story is going to be pretty phenomenal towards the end of the year as well.
How crazy it's that retail used to be called dumb money, and dumb money is making more money than like hedge funds right now in terms of total return.
Absolutely demolishing the hedge funds, bro. It's kind of crazy. Like,
yeah.
It's been crazy this year, but retail held on, and they kind of knew that these were not the
I think it's
sell.
I think one of the biggest alphas that they used to have versus us as retail investors is that they used to have the ability and then like to get all this data handed to them and an understanding handed to them way ahead of anyone else. And retail investors, they didn't have like YouTube where people actually talking about things.
Dude, there were more retail investors that knew Jensen was going to Saudi Arabia than institutional investors. Because if you knew he was going to Saudi Arabia to get some deals, you would have bought NVIDIA, right? Just like the pure momentum alone off that headline. But yeah, obviously the institutional guys didn't know. They found out when they saw him shaking the prince's hand.
Yeah. It's actually crazy. Now, if you think about it, retail has, especially because even if it's like decentralized, retail in terms of like total money that's in the market, it's pretty high. You know, when retail chases after a certain stock, bro, they can get it high. So I think a lot of the companies that have basically had more outreach to retail investors to help explain a thesis, they've been given tremendous amount of tremendous amount of value, you know, and also the stock price of just like Robinhood. Robinhood leans into its retail investors, and so they're doing really well. You know, not only from the perspective of, hey, as users, but also now, if you think about it as investors, you know.
Yeah, and also a lot of retail doesn't want to go to a financial advisor anymore. And so all that money, if it's being self-managed and it's actually being deployed instead of stuck in money markets and stuff like, I mean, like that is just more money that's entering into the economy as well.
Yep.
All right, Kris. I think that's it. Thank you, brother. Appreciate it. Chris's Twitter right there in the chat. We will do our ASTS stream when I get back next week.
Yeah,
and we'll go deeper.
Has anyone from the Space Mob reached out to you yet?
I have to check my DMs, but
yeah,
I'll check them soon. And if anyone here knows about ASTS, that's what it's called, Space Mob. That's what it's called.
Yeah, that's the community. That's the so-called community name that they've called themselves. You know, like the Palantir people call themselves Palantards, but they call themselves the Space Mob. So yeah,
anyone in the Space Mob, reach out, and we'll have you on the show.
Have a good one.
All right, Kris.
Later.
See ya.
Take care.
All right, that is it for me. This is what, a 3-hour stream? 3 hours, I believe. We're gonna have the close today. Yes, we're gonna have the close. Yeah, we will have the close today. So I'll be back. It'll be a regular day. Will we have the close? I think we'll have the close. Okay, hold on. All right, I'm pretty sure we'll have the. Gotta think, dude. Gotta think this guy. Dude, yesterday was so funny. Last night, dude, the amount of messages I got of you guys saying, "Hey, Amit, did you catch your flight? Because apparently you didn't know." I cannot believe I got that wrong yesterday, bro. I cannot believe I got that wrong. For anyone who didn't see the market close yesterday, I thought I was going to be in DC today. I'm not. And I had a flight, and the Airbnb lady upstairs, she was like, "Hey, it's 11:45. Your checkout was at 11. You got to leave." And I was like, "Oh, shoot. I have a flight today." So, I'm pretty sure we'll have a market. So if we don't have a market close, it's because something happened to the scheduling. If we do have it, you guys will see it like 15 minutes before the YouTube link will pop up. If we don't, it's something because of the scheduling. But if we have it, then you guys will see it. But I think we should. And if not, then we'll be back to normal starting next week. Netflix all-time high right here. Goodness, dude, this stock. Shout out to Dougie. This was his pick of 2025 on our New Year's Eve show that we did back in December. And yeah, it was $150, 2022, 1,200. It's been one of the best returners, best performers. I never fully understood the thesis. The thesis was that people want premium content. That's simple. And people are willing to pay a subscription for premium content. So this is where my, I guess, ADD or ADHD really hurt me, because I can't sit through a Netflix show, because it's like I need these YouTube videos. I need podcasts. Ironically, I can sit through those over Netflix, but I can't sit through Netflix. So I've never really enjoyed Netflix content because I can't sit through it. Like the only show I really liked was You. The other show is Breaking Bad, but that's not a Netflix show. But for the people that like watch the actual Netflix originally produced content, they love it. And the stock is showing how much they love it as well. Celsius as well at 40. Congrats to everyone in Celsius. Big day for this one, up 2.7%. Don't know why that's green, but it is green. It was at 34 on May 29th. So about 5 days later, it is at $40. Not a bad return in the past week. And that's up about 3% currently right now. Also, Tempest, dude, they had to deal with that short report. They recovered. Yeah, they fell all the way to 52 from basically 65. They're at 63. So that short report did nothing to them outside of give you a great dip. And Pelosi continues to win when it comes to Tempest. She made her bet in January. I believe she's still long those calls, $25 strike. And they're doing very well for her. So the shorts cannot dig down Tempest yet either as well. What's my opinion on CoreWeave? I think it's aggressively being priced, but it really doesn't matter what I think. If the market thinks AI, data centers, GPU reselling is going to be a very big business, I think that means you buy NVIDIA. But from a valuation perspective, if you think NVIDIA is getting up there, then I can see why the market's rotating its CoreWeave. But the other reason I think it's getting this momentum is because the insiders still have a lockup on their shares. So if there's just not that many shares available, that could also obviously be, creating this momentum as well. All right, cool. Will I cover the market close today? I think so. If I'm not, then don't hate me. It's just scheduling stuff. But if I am, then I'll be here. Do we have any earnings today? Yesterday we had CrowdStrike. Do we have anything today? No, it's MongoDB, ChargePoint, and Five Below. Nothing too crazy. Yeah, if I can't do it today, guys, then it really is just going to be a scheduling thing. But if I can, then you'll see me. And we will be back to normal on Monday, as usual, for the market open, market close. Now, on Friday, I'm going to be at the airport flying back. But, again, my flight is at, I believe, 5:50. And at 5:15, the S&P stuff comes out. So I'm going to try to go live. I'm going to just try to find a spot. And we're going to try to see if Robinhood can become one of the top 500 companies in the United States. So it'll be very, very exciting. The Misty Yield payout date, I think it's June 6th. I think it's Friday, right? They're going to be doing $1.47. They announced it today. They haven't announced the NVIDIA one yet, but I think it's going to be on Friday. Yeah, S&P always announces on the first Friday of the month of the rebalance, but they rebalance on the third Friday. So everyone piles in when the announcement happens, and then the rebalance happens 3 weeks later. So June 6th, this Friday. Yeah, so every week, every time they do it on the third week, but they always do the announcement 3 weeks before, which is why I think we're seeing this run up in Hood as well. And so 5:15 p.m. Eastern on Friday. We will see if Hood can get in. All right, word of the day. Let's do word of the day. When does the lockup expire for CoreWeave? I don't know. I think it's 6 months though, and they went public a month and a half ago. So I think it would be by the end of the year, and that's when we might see a little bit more selling. We do have Broadcom tomorrow. That's going to be a big one. Again, Broadcom, just like Qualcomm and ServiceNow, their AI revenues are up like 3-4x year over year. So I think Broadcom is going to have a good earnings. It is kind of already at all-time highs going into earnings, so it's going to need a really good print to continue momentum. But I think if we're bullish in video, then Broadcom should be fine. Word of the day is proscribe.
Proscribe.
To denounce, condemn, or prohibit something. The new law will officially prescribe the use of facial recognition software in public places. Some teachers still prescribe ending a sentence with a preposition, which is a rule I was never comfortable with. All right, prescribe, to denounce, condemn, or prohibit something. Hopefully the S&P 500 doesn't prescribe Robinhood from getting in this week. And if they don't, and again, Bank of America, if you missed it this morning, they came out with a report. They said, we think there's a shot. We think there is a shot. Now, again, there's other candidates that they mentioned, so it wouldn't surprise me if we don't get in. But it does feel like it's time. And if it does, it would be very exciting. You guys think September is when the CoreWeave lockup is done? All right, cool. No, that actually makes sense. Yeah, that would actually be a full 6 months if it's September. All right, so September is when we can see if there's a lot more insiders that potentially sell when it comes to CoreWeave. All right, cool. That's it. Thank you, everybody. If you don't see a stream by like 3:30 p.m. Eastern on your YouTube feed, then it's not happening today. If it is, then we'll do it. And if it's not happening, it's because of a scheduling thing. But we will be back to normal next week. You guys will find out why I'm here in like a day or two and see what the reason for this is. But it's another event, some good stuff. And we will keep this going throughout the end of the week. And hopefully Friday is the big day for us. Hopefully we see Robinhood getting included. And then we'll go from there. All right. That's it. Thank you, everybody. Appreciate it. Yeah, that's pretty much it. I think that's it. I think that's pretty much it for today. No other crazy headlines going on right now. I think Trump is signing some executive orders, so I'll try to cover them tomorrow morning or just on Twitter as well. But outside of that, shouldn't be anything else too crazy for the day. All right, that's it. Thank you, everybody. Appreciate it. Love you all. I will see you guys, if not today, early tomorrow morning. Bye, everybody. Have a good one.